Good morning, everyone. Hope you're all well. We'll get into yesterday in a second. Just need to finish this sandwich. Welcome, welcome. We'll get into yesterday in just a second. I just want to finish this quick sandwich and then we'll get going. Yesterday was crazy. It's a big zone. Hoping it gets defended. Hey Mark, nice to see you, buddy. So let's talk about yesterday. So yesterday, I went long from Globex and I managed to bank $1,500 And then on stream, I was doing some scalping, right? So you saw me kind of scalp here and there. I think I made another $300. So at one point, I was $1,800 in green. And then just something happened, right? So price just started. I was in a long trade, and price started going against me, and I was like, I kept on moving my stop loss, right, which is the worst thing for any trader to do. Don't move your stop loss, but I kept on moving my stop loss, and eventually I just took my stop loss out because in my mind I thought, well, okay, I've still got, I'm $1,800 green, so I've got that, and because I'm on a live account, so I just as a quick update for anyone who's new to the stream, I traded with prop firms, and then I got moved over to live with Elite Trader Funding, and they basically moved me over to live. So I trade with a live account now, which was around $31,000 split into two. So you have cash on hand and then money in the account. And the money in the account, I just don't like the aggression on these cells. Sorry, guys, just give me a second. I'm just a bit nervous of the manipulated move because we consolidated during Asia. That's the Globex session, and then London's taken price higher, and then of course we've potentially could manipulate. And I'm switching conversations here, but one of the things I think from yesterday, in fact, no, let's not get into yesterday yet because that's a whole different topic. So anyway, we had FOMC, right? FOMC completely just smashed down, and I ended up losing the DLL, right, which is the daily loss limit. So I lost the $1,800, which was pure net gains, and then I took my account down to the limit, which is $1,500. So I'd lost that. I was a bit annoyed, but like with trading, you've got to dust yourself down and come back again, right? So this morning I longed from Globex again because if you look at this, let me move over to this, right? If we look, this was that 4-hour candle from FOMC. Now, that's a lot of the time when you see that kind of selling pressure, sometimes it's cascaded liquidations, it's big funds selling at all-time highs. And the thing that I should have realized, and the thing that I didn't trick onto, which was so annoying because it's usually the kind of stuff I like to do, we'd been making all-time highs after all-time highs after all-time highs, kept on hitting all-time highs. Now, of course, we were going into FOMC, and we knew, matter of fact, we knew that a 25 basis point move was on the cards, right? It was priced in, it was predicted, which was propelling all of these moves up. And then effectively, it's the last FOMC meeting, right? It was the last one before a new presidential changeover of hands. So I should have really been thinking to myself, now people are going to be taking the profits and getting in because dollar shot up, yields shot up, equities shot right down, right? So everyone was moving from risk off or risk on, which was equities, to risk off. And I didn't, I was so annoyed at myself for not thinking about that because that was really, I was scalping and then I got caught in a trade that I didn't take, the loss on, and that's what happened. So yeah. So where are we today, right? So this is such a big move down. It's such a big loss. Now, my thesis on this is it's too much out of balance, right? There was too much selling. So I think it's a fair estimation that we at least come up to the pivot point today. At least come up to the pivot point, I think. We may chop around a lot before, New York. We may get wicked. All kinds of crazy stuff can happen. But I think with such a big sell-off, it's too much of an imbalance. If I move back over and we look at that, right? These are called TPOs. Now, TPOs, what they represent is single prints. Now, what that means is if price doesn't advertise long in a certain zone, and the liquidity and the order book gets so thin that price just absolutely chops through because everyone's trying to sell, it creates these single prints, massive imbalances in the market. So you can see as price opens up, we started to eat away at some of these imbalances here, or single prints. We've also got them up here. Now, I would be happy in my trade if we just close this single print today, and then on Friday, we come up to this single print maybe. I just think price will eventually come back up. And for me personally, I think that's probably the high we'll see for a while. Mark my cards on that. But I do believe, in my opinion, we'll slowly eke our way up to eat into some of these single prints before moving down again. So that's where we are. You can see we're at about $1,000 on the day at the moment. I don't plan on taking any other trades simply because I'm maxed out. Right, I've got 7 micro contracts in the trade, which is where we're at. Really, all I need to do is if I get $1,500 back, I'll have wiped those losses from yesterday, or the daily loss limit anyway. But if I'm honest, I do believe we're probably edging for a little bit more of a move up today. So hopefully we caught a nice trade up there. And that's a quick scenario. So let me just talk a little bit about my trading strategy, because Mark Fraser, who's just joined the Discord, give himself a really nice introduction, which I really like in the Discord server. Was just asking a little bit about trading styles. He got into SMC, but then he met a guy down in Canary Wharf who was kind of like, no one in Canary Wharf uses smart money concepts, and I kind of agree with that. If I'm honest, I'm not a massive SMC trader, although there is a room for it, right? I do look at things like fair value gaps. But I don't look at fair value gaps in the traditional sense, right? Like a lot of people, what they will do, they will say, okay, is a fair value gap here, right? And that's a fair value gap, great. But it's time based, right? That's the problem. That is a time based fair value gap, right? Now you can't see here, right, if and when where is the fair value gap. Yes, you can go down to lower time frames, but it's why I use order flow, because this is a time-based chart. This is 5 minutes. Right, these are 5-minute candles. If I zoom into these 5-minute candles here, right, you could probably say that we have a fair value gap between here and here, right, between that little tiny wick and that wick here. However, if I look at tick-based charts, which is effectively order flow, where are the real true imbalances? There's none, right? There is no imbalance between this price action, because you can see, you know, maybe you'd argue there's a price imbalance here on these little tick charts. So every 100 ticks, this will print a new price bar effectively. I just don't think, if I'm looking at fair value gaps, I'm very rarely looking at that as a whole gap and going, okay, I expect the price to come somewhere into these regions. What I'm always looking for is order flow, because this is the true indication of where price is being exchanged, rather than just looking at a 1 minute or a 5 minute or whatever else. The way I trade is typically in ranging markets. I'm looking for exhaustion into third standard deviation, which is essentially out of balance from VWAP. And then in trending markets, I'm looking to scalp. So the reason, if I look, let me just take an example to show you how I typically like to trade. If I go to the 1 minute, it gets a bit messy here on the screen, but just so you know, let's bring this up. So for me, objective liquidity is the life, is for me the most important thing, right? I don't like subjectivity, which is EMAs, oscillators like what would you call them, stochastics, RSIs, things like that. I'm not a massive fan of arbitration where it's up to the individual to think about, if I'm trading on a 9 EMA and someone else is looking at a 21 EMA and someone else is looking at a 50, there's too much convolution in that for me. I don't like trading like subjectivity. I only like to trade objectively. Now, for me, objective is levels, right? Key levels. So, Asia's open, Asia's high, London's low, because we know, at this at the London High here, that's the place where we've got rejected. So we know there's going to be a lot of liquidity, or at least a lot more liquidity there, because it's either going to be stop orders, right, from people who are putting the stop losses, obviously, or it's going to be people waiting to do a buy stop order, looking for the breakout trades, and either way, that generates a lot of liquidity. So I'm always looking for, are we in that third standard deviation, that exhausted area, and have we just taken a key liquidity zone? Because that for me is it puts a lot more onus, because effectively, if we think of VWAP, VWAP is true value, right? The true value for the session. So realistically, if you want to take it as simplistic, if we're buying above VWAP, theoretically it's classed as, you're not getting it at a good price. Ideally, you want to buy when it's below VWAP in ranging markets, not in trending markets, because trending markets VWAP will often act as the resistance, right, or the support rather. But in ranging markets, when it's kind of moving up and down, these are magnets. These are great. You get in and around that third standard deviation. You take a key liquidity level like a session high, usually like an Asia high, previous day high, or even pivot points. Right, pivot points are also what I tend to have on the chart, because for pivot points, again, the pivot point that I use will be the same pivot points that you guys use. So it's all about objective liquidity. They're the key things that I'm always looking for when I'm trading. Typically, I'll scalp, but on days like today, where I've managed to catch a nice move from the Globex Open, I'm holding. Because what I'm kind of hoping is, because of a lot of the excessive selling occurred yesterday, whilst it was absolutely overdue, I think it was too much. I think it's gone too far out of balance. So I am expecting some sort of a bounce back today. But yesterday, damn, that was such a crazy day, I have to say. It was a crazy, crazy day yesterday. Yeah, still. But Miranda, the thing that's key on this, and the thing that I said earlier is, like, it was so obvious, right? Because of the sustained all time high after all time high after all time high, going into the last FOMC meeting before the new hierarchy takeover, and we all knew it was going to be a 25 basis point cut. That was always on the cards. I think the confidence score, and that was so high, it was like already being priced in. So where else was price going to go? And I didn't think about it. I didn't even contemplate, because my mind was all screwed up in, like, scalping here and scalping there, rather than thinking about the logics of what it could have been. So don't worry, matey. What, we all got caught. Well, I got caught up in it. So the best traders come back, dust themselves down, and go again. Don't let the previous day affect you. And that's the one good thing about having the daily loss limit, right? I can't change that. It's $1,500. Now, honestly, if I wouldn't have had that daily loss limit there, my account completely would have got blown. Fundamentally, because I'm not. I was that deep into the move that I just wouldn't have. I just wouldn't have shut it down on the hope that price come back in. So it's it's not. Yeah, it's such a good thing to have that. So this seems like a bit of a channel at the moment building. Ooh, so I can just. I think we have a channel tool, don't we? Yeah. Something like that. So hopefully we're looking for a bounce around here, and then a continuation of a leg up. you do have some imbalance here, but where's that? But that imbalance. So when was that? That was 7:15. We go to 7:15. Yeah, so it's here, right? So this is this here, that move up is essentially that imbalance there. But if we zoom into that, can you see how all that's actually balanced? That price action there, apart from that little move there. So whilst that looks like a, let's say, a fair value gap between here and obviously that wick, realistically, it's a tiny gap here. It's not, because all of that is relatively balanced, because even though they're all bullish candles, the wicks are in there, and this is why it's key to notice that with order flow. But you'll often see me switching between this TPO, because I want to see where we are relative to the single prints, things like the value area low, high, etc., and then the point of control, which is all the way up there, but and also the order flow as well. Because you can usually see when a move's starting. Like typically, if this, I see where the point of control is here. You can see the majority of volume comes in at the bottom of this candle. I would have liked to have seen that. If I was short in the market, I want to see that activity at the top of this selling candle. Gives me more confidence that price is going to really move down. But then it does start to move, right? But it if this was, let's say, institutional, or if this was big money moving in, it'd come in near here at a key level, I think. And then we start to see, prices starting to drift. But then again, we start to see buyers coming in at the top of these candles. Again, I'll to see if we can identify a really strong case for where you get the right. So here, right, a lot of buyers come in here. You can see the point of control was down at the bottom before we lifted off. That gives you confidence that a move is relatively strong, at least. Sellers, you can see here again, these are trapped, right? Because these are sellers short on the market, point of control, majority of the volume down the base of the candle, and then of course they go away with, and then those don't get an opportunity to come back. So I'm always looking for kind of where is the majority of buying and selling occurring within a candle. These are these are 1,000 tick candles, by the way. So every 1,000 ticks, these will fill. Just to give you some sort of semblance on what I'm looking for. Sometimes I'll look at delta, but honestly, it's the volume that I'm looking for within the candle, and where is that volume residing. Yesterday was just bizarre, honestly. You know, I was I was cursing myself for not, because I had other accounts. I had some Apex accounts in the background, and I thought it was only after the after the fact I thought to myself, why didn't I just close down the live account for the day, be happy with $1,800, and then trade with some evals, but I never. Um, and that's why I was a bit frustrated with yesterday. If we get back to these all-time highs here, that puts me on parity for yesterday. I'll have got back the losses that I made on the account up here. And I don't know, I'm battling in my own head if it comes back up here, whether I'm being too greedy and thinking, because I've got a narrative in me of what I think price is going to do, or whether to just take profit. And if I lose out on a Hail Mary, then we do. Where I would consider taking a stop is probably, I mean, this is a level of support here, right? But if we broke, where are we? You know, if we break this, do we want to just take profit? Don't know. I'm just worried about the manipulated move. I'm worried that London is getting everyone thinking bullish, and then price, makes another leg down. Anything can happen. You know what it's like. I feel like I'm talking myself into taking profits here. The only thing is we're making higher high, higher low, higher high, higher low, higher high, higher low, higher high. So far, a higher low, right? So I think it's probably fair if we break this, it would be a trend change, right? And that's something we want to keep our eye on from a market structure perspective. But then that could also just be a liquidity hunt or some sort of move down. We're in a decent spot either way. We're all the way down here. That's where our order is. So I'm just running scenarios in the head. Um, I mean, I, I, I guess, I guess I teach only because, but it's not like I just try to share my journey, and I'm just an open book on YouTube. I'm not like I don't sell courses. I don't, But if anyone has a shared passion for trading like I do, then I'm always willing to kind of to offer any guidance. But I always like I would say I became a better trader when I started thinking about things myself and doing my own kind of understanding. So it's great that look, there's loads of YouTubers out there who will teach different things, smart money concepts, and all these different things, and it's great to understand them. It's great to understand how indicators work and blah blah. But ultimately, you've got to get past all of that, right? You've got to start thinking about what type of a trader do you want to be? Do you want to scalp? Do you want to do intraday? Do you want to swing trade? And then, you know, do some fundamentals, right? So market structure, understand market structure inherently. What does that look like on high time frames right the way down to lower time frames? So weekly, daily, 4 hour, 15 minute, 5 minute, 1 minute. Look at the pattern of play for where you are structurally. Like, are we bullish? Are we bearish? It's difficult on things like Nasdaq because we've just only been bullish, right, on the higher time frames. And so once you get to that understanding of market structure, it's like, okay, now what do I want to do? Do I want to think about smart money concepts and think about, okay, let's get into the discount range and then we'll long if we're bullish, or we'll go into the premium range. If we're bearish when price comes back up, and we'll look for a fair value gap or an order block or something like that, right? Whereas me, I'm thinking, okay, well, structurally, are we bullish or bearish? And then at what point during the time do I want to go long? If I'm ranging, like if it's a ranging market, I'm really thinking, okay, fade the extremes back to balance. Extremes being um the VWAP standard deviation 2 or 3, ideally 3, and have we taken an objective liquidity pivot point R1, S1, previous day high, previous day low? They're the key things. If we're trending, it's like pull back, scalp, pull back, scalp, pull back, scalp, and that's it. But my strategy, I defined myself, right. I didn't like I haven't looked at everyone's. I haven't copied someone's YouTube or done this. I've kind of understood the dynamics. Let me just show you something really, really. awesome, right? That I think is I like to use data and statistics, right? If we take like standard deviation, right? Just basic overview, really quick overview, right? What is a standard deviation? These figures and percentages here that you see, that is the same figure that you see across everything, right? So let's take a sample data set, right? I always use as an example, I'll use kids in a classroom, right? Kids in a classroom. Or no, I'll tell you what. Let's do something different. Let's do something for the military, right? Let's say there's a specific test, fitness test that you have to take in the military, right, to pass or to do something. And I'm just making stuff up here, right? Now let's say there's 20 military personnel, right, who are all ready to take this test. What standard deviation will tell us is, let's say the test, whatever it is, it's some sort of an assault course, right? And it's based upon time. So the standard deviation will say, okay, we've got 20 personnel going to take this test. We know that on average, 34, let's say zero is average, right? In this case, and let's say if it takes 20 minutes, right? On average it takes personnel in the infantry 20 minutes to complete the course, and that's what they expect. But there'll be outliers to that, right? So of those 20 personnel, maybe 14 of them will finish it roughly around in 20 minutes for this assault course. But what standard deviation says is there's outliers. There's going to be some a bit little slightly less fit who might take 23 minutes. Some may take 24 minutes, and even more still may lesser still of that group may take 28 minutes, right? But then you're going to get fitter. You're going to get people who can do it in 18 minutes, 16 minutes, and maybe 14 minutes. Doesn't matter about the numbers, it's the percentages, right? What it's basically telling us is outliers. So the majority or the mean amount of people who take it, 34, 4, so 68.2% of them 20 people will fall generally in that 20 minutes to do the assault course. 13% will fall a little bit short, and around 2.1% will be even worse, and maybe even one person might not even make it, right, because they're just so unfit. On the opposite side of that, you can get on the opposite side of that, you get people who are even fitter and blah blah blah. So think of this, right? So this can be on tests in school. It can be okay, kids getting graded. The range is from A to E, and depending on where the kids fall, they'll know the majority of kids will probably get a C. Some of them will get a D. Some of them may get an E, and even some might get unqualified. In the opposite side, some might get a B, some might get an A, and some might and even smaller percentage. So the outliers is a really small amount of time. If we use standard deviations in our trading, right? What this is, think of this as VWAP, right? So zero is VWAP. Now, this is a constantly moving target, right, as we move around the charts. But zero represents where most amount of volume and orders coming into the market that's constantly moving that VWAP slightly, because that's the volume weighted average price. It's not the price, but it's the volume weighted average price. Is where more volatility or more volume is traded at them levels. So the VWAP gives us an understanding of value, true value. Standard deviations start to say, okay, how far am I away from value? And these percentages here. So in a session, right, if we flip back over to here, this is that bell curve, right? Look at the bell curve here. And flip that around, right? So this just looks like a big bell from bottom to top. If I look at this is that same bell, right? There's your standard deviations flipped around. So there's zero. This is that the average, right? This is the zero. And then you've got second standard deviation here and third standard deviation to the negative side. So what this is saying is, on average during a session, how often do we see price in these areas, right? So you can see here we're above second standard deviation a lot of the time, right? But look at the majority of time here. Look how much time we spend in and around the kind of VWAP and standard deviation going back to here. That's absolutely what we expect to see, right? We expect to see price in and around 0 to 1 or zero to -1 in terms of the standard deviation. What we don't tend to see a lot of is between 1 and 2, even lesser still 2 and 3, and beyond 3, 0.1%. So my logic, the way I think about this is, okay, how often are we going to see price in these zones here above third standard deviation? I mean, even during the crazy sell-off, we didn't see price go beyond that third standard deviation. So I use these kind of, when price gets into these areas, as being so far out of balance that it doesn't become economically viable to keep on buying into a third standard deviation. That's not to say, by the way, that the VWAP is not going to continue to rise up, and so will you get the third standard deviation rising up. But it's good sniping opportunity. There's always a good sniping opportunity to take a trade, if that's the way you kind of think about it. So I use that. That's the first. That's the kind of way I trade scalping. But I also use objective liquidity that says, okay, if I know price, if my bias is price is going to be bullish or price is going to be bearish, and prices, let's say I expect price to be bearish, and price starts coming into these zones. What am I waiting for? Some sort of a big liquidity zone to get taken. Now that for me, for an SMC trader, that might be fair value gap, might be order block. For me, it'll be an objective liquidity level, maybe previous week high, previous week low. A pivot point R1, R2. It just has to be objective. It has to be a level that's usually good for both of us. And then what I'm trying to do, and this is where I'm trying to get better as a trader, is to look at order flow and the DOM in and around that zone to see how we react. Sometimes you'll see me move to the heat map, right? And again, I'm looking at the liquidity and the exchange of people making mistakes. So you see like 10 contracts here. When you see these bubbles, that's one person making a single order. Sometimes you'll see 100 contracts move. And then what will happen is that 100 contracts will get absorbed. And then price never comes back up to there. So that's a trap seller or a trap buyer. And I love that. When you see that, that acts as a complete like no-go zone, because they know, or the markets know, that there's a big seller trap there. So what they try and do is force that down, and then that original buyer of that 100 contacts probably is a panic because he's thinking, shit, I've got in too late or too early, and then he'll put the opposite order in, which will even drive that price further because that 100 buy now becomes a 100 sell. So a mishmash of all different things that I'm looking at. Just trying to constantly refine it and get better and get better and better. I'm not, this is just the way I've developed my own strategy, but it's not from, I spent a lot of time watching YouTube videos and kind of learning all different things, and I was not a good trader. I became a good trader, and I'm not even a good trader, by the way. I'm just okay, but I became better. That's a better word to use. I became better when I started thinking about data and logics and data and levels and understanding the order book, right? Understanding what moves price, liquidity. And by the way, SMC did help me with that kind of understanding, right? Understanding smart money concepts because of imbalances and things like that. But then when you start looking at order flow, you start to realize truly what an imbalance is, rather than just like a lot of a lot of newer SMC traders will just look purely at candle charts, right? And it's a big issue for me. They'll purely look at candles, and that's fine, but they don't understand it intuitively. They just see it as a gap in a candle and think, okay, it's an imbalance. Why isn't it an imbalance? Why is this why is this gap different from that? And you only really can get that from order flow, in my opinion, and understanding footprint charts. So I feel like I've spoke a lot there, guys. I'm sorry. I was on my soapbox a little bit. So I hope that was, I hope that was just, I hope I've still got people tuning in. Let me just double check. Oh, we've still got 3 on. So yeah, that was a whistle stop tour of thing. But you, to answer your original question, I don't, yeah, I don't. I do this for my own kind of journey and to stay humble and to try to, I put lots of education out on my YouTube channel. In fact, everything I do is normally I trying to understand, trying to follow my journey and stuff like that. So, but if you want some kind of sessions and stuff, mate, just drop me a message. I'm more than happy to kind of go over stuff with you. But it's not going to be SMC. I'm not really an SMC trader. Just give me 1 sec, guys. I've just got to make quick. Okay, chaps, let's talk New Year's resolutions. What is going to be your New Year's resolutions? I'll go first, actually. Mine is going to be I'm going to try to quit vaping. It's so annoying. It really is. I don't want to vape. So I'm going to try and quit vaping. And I'm going to do dry January as well. I'm going to cut out the ale for a month, see how I get on. Hmm, don't like what Price is doing here. It's kind of pushing down the wrong way. I think we at least want to cover a break-even point here, right? So this is our break-even. I am not, I promise you this, I am not looking to take a deficit on the account. What I would like is VWAP to come a little bit higher because, if price comes down to VWAP, a little bit of exchange of liquidity and then another leg up, that would be great. I just don't want one of them days that just turns into a fucking wish-wash, typical NASDAQ, get everyone bearish, get everyone bullish, then decide what it wants to do, because then that's just horrible, isn't it? That normally is the way. But I've got to be honest, I don't know about you guys, but trading the Globex sessions, at least over the last few days, has been great. If I only traded the Globex session Monday, Tuesday, Wednesday, and today, I would have been 6K up. And if I wouldn't have continued into New York is just a pure. Not always. Sometimes it'll just completely rip off the bat, and it doesn't look back, right? But more often than not, you get that whipsaw effect that just really wipes you out. New York is famed for that, and normally what you see, it's the standard, right? You guys will well be familiar with this, but you see it time and time and time again, where you know it's the Wyckoff, right, which is the consolidation in one of the sessions, which is usually Asia. Then you'll get a manipulation, say London, then a move up, right? That probably slightly exaggerates as a move up. And then New York will come back in to balance, right? Which is probably VWAP or something like that, before moving up again for expansion or distribution, right? And if we go back, I'll do it on the 15 minutes, right? And sorry, just bring us back in. If I'm on the 15 minutes, right? The sessions here. So let's start with this here as an example. Asia consolidation. Let me just take the lock off. Consolidation in Asia. Then we get is the start of a manipulated move, right? Because remember, London doesn't finish until here. So manipulation, back in, and then the move back into balance, right? So classic example there. And then we see Asia, consolidate, London. Didn't happen here. This was just, so this is a pure trending day, right? You can see it here. Just moves up, doesn't really look back. What happens if we go a bit further on? Here's the classic. Asia, consolidation. London, manipulate. Back up, takes out the high of Asia, and then expansion from New York. Consolidation, manipulation. Back into the range, and then let's say uber expansion. But that's the kind of thing we see all the time, right? It's like consolidate, manipulate, distribute. Sometimes it can be consolidate, distribute, and then manipulate. So sometimes them two can be put around, but usually you tend to see some sort of a consolidation event in Asia, and then manipulation event in New York. If London carried on into New York before another move down. Very rarely do you just see. In fact, you really you really can't go back and see that. So if that was Asia, that was London, and then that was New York, you'd never see price just do that. There's always something that does. That's just the dynamics of what you see in the market all the time, for obvious reasons. Like why would that be the case? Because we'd just all be rich, right? If everyone just longed. Um, and that's the game we always need to think about. What is happening now? We're consolidating. Okay, what's the potential that price is going to do one thing? Like, right now, I'm just trying to kind of forethink what's happening. So we had consolidation, not really a manipulation, right? Because London opened here. So realistically, this is your consolidation. My concern now is that has London manipulated to now come down before New York drives up? I don't think that's going to be the case. I think we'll see this back into the range, and hopefully up to here, and then something else might happen with New York. I don't know, but what I'm holding on to for me trade is ideally into up to here, which is what 21,709. What does that look like in terms of the chart? 21,709, 21,709. It's below the pivot point. I think that's a very fair target today, simply because we've got single prints, right? I think we were too exhausted on that move. I think we oversold. So I think we need to find some level of balance. So I can see us coming back at least to the pivot point. And if we come back to the pivot point, by the way, that'll probably put me at about 3K for the day. I mean, I'm just kind of hoping that that's the case. And what that will do was completely wipe off all of that bad actor, all of that bad shit that I missed out on yesterday. So I think it's worth, and this may be to my detriment, but I think it's probably worth that I've talked myself into it, actually, to not think too much about the stop loss yet. In fact, I'm just going to remove it. At the moment, we'll continuing higher, pull back higher, and that's it really. Right, hang on, let me just catch up on the chat. So, yeah, Mark, that's it. Take all the best bits of the stuff that you've learned and make something of your own. That's the best way, in my opinion, matey. I completely agree with that. The reason, by the way, so it is an interesting one. So I only ever used to trade either Trade of Eight or Trading View. So I'd link Trade of Eight to Trading View, and I love that. But when I got moved to Live with Elite, I had to use a platform that linked to Rhythmic. Right now, I've never used Rhythmic because I only trade on a Mac. So I had to I had to just use a platform that was Mac compliant, that I just needed to set up Rhythmic on a Windows machine, but I could trade on a Mac. And it's called Edge Pro X. It's essentially Motive Wave. If anyone's ever heard of Motive Wave, took me a little bit of time to configure it and work it out how I want to use it, but now I absolutely love it, and it's just such a great platform. We've got order flow, we've got tick charts, we've got time-based charts. We've got an overview. If I want to look at all the different securities, whatever it is, indices or equities rather. Obviously, we've got a nice heat map. Now, if you wanted to buy Bookmap alone, you're paying a fortune for it, and that's without the data, by the way. So you get the heat map, and then of course TPO, which is another one I'd like to look at. So it's a phenomenal piece of software. I think it's like $39 a month, but I get all of my data included into that as part of my live account anyway. And I don't think I'm going to move away from this platform. I just really like it that much. It's like price is making a move down. What have we got today? So GBP final GDP quarter over quarter, unemployment. So what's that? That's 130. So there'll be some fun and games before the open, I would have thought. Yeah, I mean, I've got to be honest. I was watching the Liverpool game yesterday, and I sank a bottle of white wine and two large beers, and I felt a little. Let me just say, I felt a little bit fizzly by the time I'd gone to bed, and I think it was probably put on by the fact that we had such a sell off yesterday. I was looking for an excuse to have a couple of drinks, and I ended up watching the match, which was the primary reason. Um, a link to Edge Pro X, yeah, sure can, matey. You get a 14-day free trial as well. Not an affiliate or anything like that, but give it a shot. It's a really solid platform. It's just in the chat now. But I like it. There's tons of YouTube videos and stuff like that on it's Motive Wave. I mean, you can get the Edge Clear one if you want, but the Motive Wave, and you can do it as a built-in copy function as well. So if you have multiple Apex accounts, you can copy all of them with the copy trader. The only thing you can't do, which is slightly annoying, which you could, is copy across multiple companies. So I don't know if that's something they're going to look at in the future or not, but it's not a bad platform. I really like it. Also, just going to put my Discord link in the server, guys, if anyone wants to join. By the way, guys, I'm trying my best to get to 1,000 subscribers. I think I'm at about 545. So I'd really appreciate if you would drop a little subscribe just to kind of grow the channel a little bit. And that's the last thing I'm gonna request. I'm not shilling anymore. Mark, do you mind if I ask how you did your knee, mate? How did that happen, Butter? I imagine someone like Rips would have made a killing yesterday because he's a momentum trader, right? So we probably would have caught that short. And I'm keen to see how he got on today. Actually, I reckon Rips probably caught that. The thing that was slightly worrying me was we got rejected at the previous week low, pretty much. If I had more, I'd look, if we come down to here, I'd look to take another long at this base and see if this starts offering support. Where are we? 21,499. Right at that 21,500, right? So 21,499. So where would that be? Somewhere around there. What was it? Was it your cartilage that had gone? A couple of my football buddies have all had the knees done. Just wear and tear over years. All right, let's see. A lot of confluence around here, right? Got VWAP, we've got the bottom of the channel. Potentially. I mean, this is, subjectivity 101 right here, by the way. Nice rejection. It's a funny period because you're going to have a lot of people thinking bearish at this minute, and rightly so, right? Because I just think personally it was too big of a rejection yesterday. I think that's took a lot of money off the chart, off the markets, and I just naturally expect a bounce back today. Not nowhere near coming up to where we were, but I just don't see another big sell off unless it's propelled by news, but I don't know. But look at the yields. That's the 10-year yield. absolutely flew up. Uh, bonds tanking. We got the 2 year here. What's that? 2 year tanked. But the 10 year, so longer investments, rising. Just gonna pop to the little boy's room, gents. I'll be back in a sec. Should we see what corny music we can find on YouTube that's royalty free? Let's see. What have we got? Background music. Let's see. Oh, no way. No, no. Let's see. Autumn vibes, chill. calm. That's what we need. This is the kind of vibe we need, boys. Chilled music. Calm and relaxing music to settle the psyche. This is a nice vibey one. Just lower it a little bit. Did anyone cast a long from Globex, by the way? Is anyone else long with me? By the way, fellas, that if it's probably going to be a boring session to watch me because I'm in with my full contracts and I'm just long. So you're not going to see any other trades today, unless things shake up a bit. But it's just going to be that, really. But if there are any questions, anything you want me to discuss or go over, just drop them in the channel and I'll more than happy to answer any questions, by the way. Do you know what? It's the most, the realest thing ever is no one can teach you to trade better than yourself with time in the charts. Just sitting, watching charts. That's all I do. Just sit and watch the charts. Even sometimes when I'm not trading, just because I like to kind of see the interaction between buyers and sellers. It's the only way you can learn. And another good way as well is because I record these on YouTube. When I'm watching when I play it back and watch myself, I ask myself questions like, in hindsight, now that I know where price is going to go, was that really such a good move? And what can I do to improve? Why did I enter there? As an example, and it's really good to be. It's almost like back testing but forward testing at the same time, because you can kind of know what the future looks like and see what you was thinking at the time you placed that trade. Just ask you a quick question, guys. Do you understand what you're looking at when you're looking at the book map? it's not book map. It's a heat map. But do you want me to go over this in any way? I mean, is everyone familiar with what you're looking at when you're looking at the heat map? Yeah, that's right. Yeah, I mean, look, there's two types of participants, right? So we have market makers, who is the liquidity, right? These are passive. These are orders that are just sitting waiting to be filled in the order book. They're just called market makers, right? People who provide liquidity. And then there's market takers, right? They're the people who are active orders, aggression, so market orders, right? And so ultimately, if there was never a market order placed, price would never move, right? Because no one's hitting the bid or the ask to fill those orders. Yes, there might be liquidity sitting above and below, but if no one's aggression comes into the market, then we don't see any price movement. And so when we're looking at, you're right, when we're looking at these colours here, they represent the density of order in the order book at these levels. The darker the red, the more orders there are. The lighter, or blue, is less orders. And these bubbles here, these are the aggressors, right? These are the market takers. These are the people who are pushing price, lifting the bid, or pushing price up or down. And the size of the bubble represents single entities in the market. So this here was 13 contract buys by a single participant in the market. It's always really interesting to see what bigger players are trying to do. So you can see 10, 42, right? That was a single player buying 42 contracts at that level. Now, something should strike you here as like, okay, he's bought 42 contracts, so he's long here now. This guy is long at that point, and now price is moving away. So he's now getting a bit itchy in his seat, right? Thinking that's a lot of money. I mean, even small price movements with 42 contracts. It's 42 micros, right? So it's 4.2 minis, let's be honest. That's the thing I always like to see when I'm looking at the market in terms of how it's moving. Just looking at the participants playing the game, especially around key levels. Look at all, you can see all of the asks getting thicker here, right? Really starting to build. The liquidity stacking, right? It's going to take a good amount of market aggression to push that down, to fill them orders. But these are all limit orders hoping to get filled by price coming into that and pushing back up again. And before big news events, you see the order book completely cleared out. That's where market makers who are providing that liquidity don't quite know which is going to happen. And then obviously ease of movement, because the order book gets so thin, is really, really fast, right? That's where you get a lot of slippage, because where you've got 5, 8, 3, 7, 13, these are all zeroed out, or you don't have any liquidity. and then all it takes is like a 4 or a 5 contract price to really push price higher. That's why it's always risky. You know, getting caught by slippage on market news. This is ballroom dancer music, this. Need to break above this kerfuffle. Thanks very much, Dustin. Really appreciated. Yeah. I mean, we're lucky in the UK, right? Because we have probably the best... Let me just lower this music. This suffers. Yeah, we're lucky in the UK because obviously we get the arse ends of Asia, full session in London, and then also New York. So New York starts for me usually around 2:30 p.m. So it's I think we're lucky in the UK because we get to trade all the markets. So it's awesome. But yeah, I've been trying to do as many lives as I can, just to kind of come on and just get amongst more to share the journey than anything else. I'm not here to try and sell courses or do anything like that. I'm just here to share what I'm trying to do and try to impart something, if anything. My only concern with Patrick, and it's the only concern I have, because he's a funny guy. Don't get me wrong, he's a really funny guy. It's just he doesn't share his P&L. I'm always turned off by traders who don't show the P&Ls live because, warts and all, you know, no one's perfect, right? We all have good and bad days, and it's not wrong to have a bad day. Just share it. don't think I've ever watched Trade Brigade. Morning, Covpet. No, I'm long today, matey. I'm long from the Globex Open. Patrick Whelan. Yeah, listen. Don't get Patrick is he's built a thick skin over the years, but he's been doing it for a long time, and he's he's a good guy. I think his tiff with Rips, because I really like Rips as well, right? I think Rips is a really good trader. I like that banter between the two of them. I think it's a little bit frosty at times, but it's good and it's healthy. I think Patrick's actually quite a good trader from what I've seen. I think he has a bit of an issue with top step now and again, doesn't he? Which he's called out on a few times. It's all healthy. It's all healthy. It really is. You know, it's good that I think what I love about YouTube is it's good for people to have the ability to watch different people, because styles and trading ideas make the markets, right? If everyone had the same idea, then it'd just be a bit crazy. But I don't come at my style. I'm not SMC or anything like that. I'm more of a. I like to fade markets traditionally. I am looking for reversals. I like to trade extremes, imbalance. So a lot of the time, I'm focused predominantly on TPO. So right now, if we look at this is yesterday's session, right? These were all of the TPOs, sorry, the single prints that was left behind from the consecutive push-ups of all-time high after all-time high after all-time high. Now, in my mind, I knew that these were going to get filled in at some point, because markets don't like to see single prints, because what a single print is price advertisement, right, at such a small time level. So what that means is how much time did price spend at these levels? Almost no time at all, which is why the order book just got, relatively thin, overwhelming disproportion of buyers to sellers, and this is just not good. The markets don't like to see these. So you see all of these got filled in, and I was saying before on the stream that I'm annoyed at myself, because yesterday I got caught out. I was long when I should have been shorting. Now we went weeks of all-time highs coming into the very last FOMC meeting, and we all knew it was going to be 25 basis points, right? I mean, that was as obvious as anything. The market had priced that in over the last few weeks of continuous highs, and I decided to fucking long. I'm like, I got caught up in a scalp, and I kept on moving my stop like an idiot. And of course, what else was price going to do? Last FOMC meeting, crazy. Now we flipped that in reverse, though, right? I think this was too excessive, in my humble opinion. I think whilst it was absolutely necessary that we had this correction, it was too big of a move, and it was a lot of cascaded events, a lot of cascaded liquidations, everyone piling into the shorts, releasing the positions. And now I think, for me at least, I'm hoping that at least we come and fill this initial single print. My thesis over the next few kind of coming into today and tomorrow is that we'll probably come into maybe even fill in this second single print, but I do believe we're going to start seeing some selling off, because markets needs it, right? I mean, there's been no respite at all for the market, really, significantly, at least for swing traders, because it's just been going up and up and up. So today, kind of as an intraday scalper, kind of got in at the Globex. So where am I long from? Let me just double check. Long from here, right? Just shy of 21,500. I'm aiming for that first single print, which is around 709. So roughly, if we look, 709 is around here. Right, there's the pivot point there at 720. So objective liquidity, which would be nice, okay? But 709, I'd certainly be looking to take profit there. If I just look at where that is relative to the move. So that, from where we are to here now, is 1200. So that's probably another 1200, maybe just get shy of 3k if that comes in. I'd be really happy with that. I really would. I'd take that. That would cover my losses from yesterday. The only thing I don't like to see is when we don't build from the base on order flow. So you can see kind of point of control here near the top. Another one more point of control. It means that sellers are getting in later and later to push price up. Really, you want to see the base of these candles being built with higher volume. Like here, like you can see lots of buyers getting in at the top. It's always not a good sign for me for continued momentum. That's what I'm looking for with order flow, effectively. I mean, we could still push up. Do we have any main imbalances here? I mean, yeah, we've got a couple of little small imbalances on the tick charts here. A couple up here as well. So we could still continue higher. At $1,300 now. That's nice. I will check out that trade brigade. I'll check it out for sure. Well, now the futures market's open, right? So this is the kill zone, right, for New York. Here. So we really need to get through this previous week high. That's acted as a resistance here. I just hope it's not a fake move to the upside first. Guys, if that music is annoying anyone, please let me know and I'll switch it off. I done it. I did a video rating my best. Let's see what channel. Playlists. Oh, sorry guys. Just show you, but it was so this was me rating rating 4 traders. So basically there was Alpine, Rips, Patrick Wheeland, and 0 Day J. I'm not going to spoil it for you who I picked, but if you want to watch that, I was actually live. I was on Rips. I was watching Rips on a channel, and I hadn't realised, but he watched the video, and he put it out there on his YouTube channel. And I think I got like 50 subscribers literally within that one day from his channel. Because he said I watched your video on rating for the YouTubers. He was one of them, and I was awesome. I was really pleased about that. Does anyone watch 0 Day J by any chance? How many trades? It depends. If I'm in a trending market and I'm scalping, usually I will. Okay. And if I'm scalping, I can take 20, 30 trades in a day. If I'm in a ranging market where I'm catching a reversion from a third standard deviation, then I'll hold it. Sorry, I've just had that up, haven't I? Yeah, check it out. I was gonna do Nutty, but he didn't make me list. I like Nutty, don't get me wrong, he's a really good guy, but oh man, we are starting to plow. But like today, sorry, Dustin, just to answer your question, today I'm in 7 micros, and I'll plan to just hold this now, as long as possible. No, I know. I think that about. I mean, I think that about Alpine as well. I think Alpine. If you've watched Alpine, he's a lovely guy. So is Nutty, really really good and really honest and transparent. But I think with Alpine, he focused on his opening range trade, and that was his bread and butter, right? And when that got stopped by Apex, it's like he completely lost all fundamentals of how to trade, and he was switching between different ideas and concepts. And I think that's never a good sign, right, for the trader. I think the bonus with a lot of these YouTubers, and it's not a negative, is they built a nice amount of wealth, right? The likes of us, we haven't got. I don't come from a lot of money, and I rely on prop firms because I feel like I can trade. I like to kind of use that as a way to build up me little portfolio. If I was just trading a live account, I think I'd struggle because there's no rules, so it kind of forces you to be a better trader. So linking that back to Alpine, because he's got the ability to keep on buying accounts, you can just keep trading, and effectively you'll figure it out eventually, right? That's the point. You figure it out. But I like Alpine. I only started trading prop firms at the very start of 2024. January 2024 was the first ever time. Didn't even know what prop firms were. I always used to just trade cryptocurrency for years. If you look at my earlier channel, all it was is just about cryptocurrency and Bitcoin and stuff like that. And then when I switched over to prop firms and kind of understood it, everything just changed. Like the liquidity alone, the amount of liquidity and the way the market moves on NQ. I started on ES, by the way. I was trading on ES first. And then I dipped my toe in the water on NQ, and it was like, wow, this is it. This is what I've been missing. And then it was just about trying to hone in on getting good at trading. And like, no one's the finished article. No one. You've got too much to contend with. You've got psychological, risk management, setups. Knowing when not to trade is just as important to know when to trade. All these things. And then to compound matters, you've also got lots of different rules for lots of different prop firms that you don't really kind of fully understand what's right and wrong. And I think that's a big thing that I don't like about prop firms at the moment. Like, I'm trading my live account now, right, which is great because there are no rules. And I don't have to worry about that. That's just an added thing that I don't need to worry about. But with prop firms, like Apex used to be the holy grail. Then they introduced lots of different rule changes, 2.0, 3.0, and now I can't physically think. I'm trading here, and I don't know if I'm going to break a rule by doing the way I trade. But equally, I'm not going to change the way I trade because the rules are just, I don't know. I just find the rules too much to bother with. So I just been trading with my live account. Okay, so now price wise, we're at a point where we have clawed back yesterday's losses. However, yesterday I was $1,800 up, so I ideally, if we can claw that back too, I will be absolutely over the moon. Yeah, pretty much, Dustin. I only trade my live account, but I'm going to be buying some evals for sure. I will be buying some evals. I want to try to build. I want to try and build up next year to, trying to build up Apex, maybe some Top Step. I had a Traderify account, but I was really annoyed. I passed the growth stage on 150k. Sorry, a 50k account it was, not 150. And all over their website, one rule and one rule only: just don't hit your drawdown, which on a 50k was $2,000. So day one, I took $600, and then on day two, I took $1,400. So I took the account in 2 days up to like $2,000. I wasn't too worried about the consistency rule because the way I trade, I felt confident that I'd kind of get there. And then I took a loss. I got stopped out, and I hadn't realised why I got stopped out. Sorry, Mark. I posted the link there, Mark. It's actually it's three up if you click that link. But on the Traderify account, I hit $1,200, and the account just stopped me out, and I didn't understand why. But now I understand. There's also a soft breach of a daily loss limit. So you have a $2,000 drawdown before you lose the account, but you also have a $1,200 soft loss. So then I'm starting the next day with $700. It just like wipes the floor. It's just like, how can I trade with $700 on a $50 account? Sorry, a 50k account when you either don't put a daily loss limit in of the so if you're gonna put a soft loss, give at least more room to breathe. I just don't see the point of having that daily loss limit if your limit is only 2k and the daily loss limit is 1,200. Just doesn't make sense, because then you're almost starting at a loss. It's like difficult to come back from. Guys, if you're don't mind, I'm trying to grow the account. Account on the head. I'm trying to grow my YouTube channel. I'm going to be trying to do a lot more lives, kind of explaining what I do as a trader. If you don't mind subscribing, I'd really appreciate it. I've also, at the top of the channel, I've also posted the link to the Discord server if you want to get in. Okay, we're at $1,700 on the day at the moment. This is looking okay. I mean, I want to see this pump continue, though. I really want it to expand out. Where are we on the single print? Starting to eat away at it now, right? But we want to try to get this single print closed. At that point, what I would do is then look at market structure and take profit. I'm not just going to take profit here, just in case price wants to come back in. But ideally, if we do continue to rise up, we're not far away now. We're only about like 80 points away. But if this continues to move, we want to be using market structure to help us. See what I was saying before? You want to see the base, right? The base of the candle building, right? You see here, not quite the base. Why is this doing that? Sorry, guys. It's because price is continuing higher. If we look at the volume, so volume, it's relatively the same. You switch over to here a second. What are we seeing? Oh yeah. So this is confirmation, right? We're seeing more volume coming into the market. Cumulative volume delta is rising, which means more aggressive buyers are coming into the market. So we're looking good. We're looking to take profit around here for that first single print. Currently at around $1,600, but let's see. Back in a short sec, guys. Okay, so let me shut these sons in the house. Always around winter in the UK, we get the worst sun. Low sun. So here's third standard deviation. I don't like that. So the next price level for me, coming to the midway point of the range, but we're also coming to third standard deviation, which is what I don't like to see. But the next line, right, is pivot point here. So the next objective liquidity is the pivot point. Of course, we have a little bit of resistance here, but I want to see price continue to battle in. What are we at? $2,000. I think we can probably get up here. So start being a bit sensible now. You can see the TPOs are starting to close. The single prints, rather. Here's the pivot point. I'm looking to get out around 709. Somewhere here. Whoa, if you look at all of that, look at all of that bit there, the stack in here. We are creating single prints here as well, remember. This price is not advertising long. And we're just going to keep on going below the neckline or the resistance level, because I don't want to lose profits at this point. Give myself a little bit of room to breathe. All out. We'll take that. What was that 20? Just shy of 2200. Yeah. We were really lucky. Got right in at the. How many points was that? So 21,500 to 21,664, nearly 200 points. Well, sorry, nearly 164 points. Not bad. Traditionally, I don't not normally in trades that long. I'll probably revert to some scalps now. But that was nice because yesterday I took a bit of a loss. Hit me daily loss limit yesterday, $1,500, but I was $1,800 up, so that was like a kick in the balls. So to get 2,200 is not bad. I'm happy with that. So we've got some news in an hour, haven't we? This music is not great. See, we're at third standard deviation now, right? So, like, I'd want to see us take an objective liquidity like pivot point. So, for example, if price does continue up to the pivot point and we're still hovering around here, I would certainly think about shorting, specifically as we come into New York. I just thought, I thought of, well, here's a question for you. What was, after yesterday's sell-off, what did you guys think price was going to do? What was your assessment on price? My assessment on price was it was too extended. I think it was a necessary sell-off, but it was overextended. So my thought process coming in this morning, which is why I longed as soon as the market opened, I just hit buy full port, and I thought price is going to go up today, but I still think it's going to be bearish. I think market structurally it will be bearish, but I do believe we'll come back into that, nowhere near. I don't think we'll cover. I don't think we'll cover all of them, that big push down, but I do believe we were going to fill some of the single prints in. What did you guys think? Just curious. See that there? 104 in terms of a single contract, a single entity. The concern I have for that is that's a trapped seller there now, right? So someone's seen this push down and thought price was going to come down. 104 contracts, bang. Still may be saved, and he's maybe hopeful, but that's a large set of sell orders. There's actually 25 contracts there. Which makes me think price is going to continue higher. Because typically markets don't let mistakes off easy. So I'd be surprised if price does come down now, because the person who sold 25 contracts there will be happy. This is Edge Pro X, but it's a take on Motorwave, if you're familiar with Motorwave. It's an awesome platform. You have, I mean, so this chart, I've got 5 minutes and then I've got 100 ticks here. On this chart, it's just an overview of all the different instruments that I'm looking at. On this one, we've got the heat map. Then we've got TPO. I really like TPO. I like to understand what price is doing in terms of single prints and point of control. It's a superb platform, and if you buy, let's say you buy Bookmap, what are you going to pay? $133 or whatever the cost is for Bookmap, and then on top of that, you've then got your fees that you need to pay for your CME data. It's like all in one platform. Yeah, actually, Miranda, that is absolutely spot on. Could also have been profit taken. You are right. It's very true. Yeah. So stop losses, purely just stop losses TPs. They're just opposite market orders, aren't they? But as a stop order, same as um a buy stop for a breakout trade. That's why, like, you hear a lot. People are just hunting for your stops. They can see your stops. You can't see a market order. A stop order is a market order, right? You can't see a market order. It's not placed in the table. It's not placed as a limit order. You basically tell your broker, when price comes to this level, make it a market order. So I always, with hunting for stops, really, they can't see where your stop is. They just assume, based on the zone or the area that the price is going, that either a stop order will be triggered, which would be a market order, or a buy stop will be triggered for a breakout trade, looking for a move, as a continuation. But you definitely do not see stop orders on the limit on the order book. I think that's a lot of traders get that wrong. They naturally assume, some magical mystery tool can make you see stop orders. A stop order can only be put in as a market order. It's a market order, right? But to your point, Miranda, absolutely spot on. That could have just been profit taken. But it could also have been a trap, right? Where they expect the price to go down. But I think based on that move up, you're probably right. I think it's probably more like profit taking, specifically in the area we're at, right? We're approaching, the third standard deviation. We are a lot out of balance. Yet buyers are still pushing price higher. Just looking here, see we've got a fair amount of sellers, buyers trapped who are long and at the top. We have a nice delta here. I'm short, and we have the point of control at the top end of the base of the selling candle. I wonder if we're going to see a little bit of a pullback now. Starting to see some big deltas coming in. -3, 194. That was a big selling candle. Tempted to short. This is the clue, right? Look at this. Look at all the buying at the top of the candle. Look where the candle finishes. Price comes back up here, rejected or absorbed at that same level. Same again. buyers trying to push price up. It's like it's getting absorbed at this level. What's the heat map show at that zone? See, buyers coming in. Oh, sorry. Strong level. What's that? 265? 665? Well, it looks like we took profit right at the nice level at the moment anyway, so we can't complain. Right. This is the most I've ever had watching my live. So we currently have 20 people watching the live. My best to date was 19. So everybody give yourself a round of applause and a pat on the back for that. Thank you. Of course, I've got to ask, guys, if you don't mind subscribing, I'd really appreciate that. Coming on live every day. And hit the like button, Dustin. You said it, baby. That's exactly it. Hit the like button, guys. Really appreciated. Just as a recap, we took a trade from the Globex Open. That was 11 p.m. my time in the UK, and then I fell asleep and Price kind of wigwam for a bit, and then we really expanded out during the kill zone of New York, which is great. I'm skeptical. What I want, and then I took profit at the top at just about $2,200, a bit more than that, 22,100. My kind of idea, at least, was that we were going to close this single print for today, and then anything can happen, right? The news could be bullish. We could even try to maybe fill in this single print again. I mean, that would be an extravagant move without news, right? I mean, this was all FOMC and the meeting and everything else. But I just did not anticipate price falling again today. I just thought it was overextended on the sell. Too much selling occurred, probably from what a lot of people thought. So it was just really, I mean, if you go back, I was looking at this. I don't think I've seen a 4-hour candle. How many points was that? $983 points. I mean, that's insane, right? 983 points in a single 4-hour candle. I don't think I've ever seen that drop, ever. 983 points. Wow. I've just got to run some numbers. So, is it, it's $5 a tick, $20 a point, right? So, 20. If you had one contract, have I got my maths wrong there? Is that right? Is it $5 a tick, right? $20 a point for one contract on NASDAQ? Can someone just confirm that? I think that's right, isn't it? Hang on. Oh, this is micros, but even I'm talking if it was minis. If someone caught a single contract mini, right? Let me just see. Is that true? That can't be true. That. So one contract. If you'd have caught that sell, so for one contract, if you'd have caught that move, 19k, 19.5k for that one for that move. If you'd have gone short on one contract, that's 19 grand for one contract. That is insane. So for me, what we're looking at, get back on the charts. It's massively extended, right? So theoretically, price can come up. Maybe I got out a bit too early there, to be completely honest. But I'm not going to complain about that. Thanks, Mark. Appreciate that, matey. So we've got news in 45 minutes. News is GDP quarter over quarter and unemployment claims. So that could be really interesting. Right, so this is the nation's earliest economic data. The market's impact fluctuates from week to week. There tends to be more focus on the release when traders need to diagnose recent developments. Why do traders get? Although it's generally viewed as a lagging indicator, the number of unemployed people is an important signal of overall economic health because consumer spending is highly correlated with labour market conditions. Unemployment is also a major consideration for those steering the committee. So if actual is less than forecast, it's good for currency, right? So good for currency. So if we just look at currency a minute. So DXY, sorry. So it's inversely correlated, right? You can see so yesterday currency went up, which is off risk, right? Off risk is currency, on risk is equities. So price battle down, currency goes up. So when we're looking at the data, we need to think the opposite. So if the actual is less than forecast, it's good for currency. So if actual is more than forecast, it is good for currency. It's good for markets. So where's the actual? So forecasting 229 in terms of unemployment. So if it's more than 229, that will be seen theoretically good for the markets. Is that right? Actual is less than forecast is good for currency. but if forecast is less than actual, it's good for markets. Actual is less than the forecast. Yeah. So if there's less unemployment than forecasted, it's good for currency. But if it's less than forecasted, theoretically, that if currency goes higher, we anticipate that on risk assets go lower. So it's a little bit of a good news, bad news. Good news means bad news for markets. Bad news means good news for markets kind of situation there, I think. So we'll see what the numbers look like when it comes out. Looks like we're still pushing up. Even though price is trying to push down, buyers just seem strong. So we're at the point where I got out. We haven't really had a pullback from this move up. That was such a strong move up. Lots of volume, and even matching that volume was pretty much there, right? But not able to push price down. Obviously, a lot of bids getting stacked. Buyers strong, absorbing that liquidity to the downside. So price can make another leg up. Really can. You know, relatively speaking, that's still strong selling volume there, comparison to these. And ideally, what I would like to do is if we pull back, like, so look, I took profit here, right? This is the trade, got in long, took out there. Really, if price comes back down, maybe, you know, bottom of the channel, maybe, because you could class that as a deviation below the channel. You know, maybe even back into VWAP, and then I go long again. That would be a sweet move. I just wanted to realize some profit. So for us, let's hope we get a bit of a pullback, because I still think, you know, there's too much overselling occurred yesterday. So I do think we'll claw back some of that. It's really going to be interesting, Jordan, this news event, what that does to the market, specifically if unemployment comes in lower than actual. Yeah, if I have to. So, let's see if we can paint a bit of a picture in a minute, right? So usually we like to see DXY is inversely correlated to the NASDAQ, right? So that means higher currency, obviously moving your money from risk on to risk off. Then we have bonds, right, which is government debt. Let me take this off. How do I do that? DXY. What's that? 10-year bonds. So longer term interest, holding the yield. I don't know what the percentage is, 4.3% on a 10-year yield. So you get, if you hold for 10 years, you get 4.5%. 2-year was pretty much mimicking NASDAQ. Two Y1. Oh. 2Y1. No. No. Micro gold. And then bonds. So bonds is government debt, right? And that's just been tanking. Doesn't look like there's any kind of pullback at the moment, though, guys. My real target, I wanted to get out at 709 because that's the top of the single print. Sorry, 711 would have been roughly. But we've got so much more room to grow if price wants to continue up. I would just like a pullback to get back in on a long, preferably below, and preferably below where I got out. I don't know about you guys, right? But I like, fundamentals are really key, right, to understand in terms of unemployment, NFP, PMI. What else do we have? CPI. We have all of these different economic news things that come out, but it's like a tightly woven web, and they all interconnect in different ways. Like, you know, you'd naturally assume when you're okay, job market, less people in work means slower economic growth, but it has an opposite effect on the rate, right? The rate in which the CPI gets moved, because or the rate for FOMC, and all of these different factors. I find it really difficult to wrap my head around. So I get to the point now where it's like I'm always trying to understand the fundamentals side, because it's important, because it's a little bit of an understanding of what you think markets want to do. But even even when you know what even if you are, you know, solid with your economics and you understand what each of these things mean relative to the forecast, markets can do the markets can still do the opposite of what you think. And why? Because a lot of the time it gets priced in early, right? So they have a forecast where they'll base it upon a prediction, and if the prediction's high enough, you know, they'll have priced that in, right? And then what they do is when the news comes out, depending upon how far the spread is from what they think the percentage was based on the most amount of confidence, the markets will react to that. So I've kind of found it upon myself that, is it even worth knowing what they all mean? Like, we know CPI is obviously inflation, we know FMC is the rate cuts or the rate hike. We know what the unemployment claims are. We know what sales are. We know what they are fundamentally, but what do they mean in terms of the bigger picture? My mind goes in a spin with all that, trying to think of it, and I spent a lot of time trying to figure it out. What I came to the conclusion is, it doesn't really matter. Markets will do what markets will do because there's so many different participants with different ideas. It's difficult to gauge even what you think might be the right idea. So I don't bother. I like to know when the news is coming up. I use this. So this in the corner is a really nice indicator called News by 2 degrees. That's spelled TOO degrees. And what it does is it gives you. So if I click on this, I can say what news do I want. So, you know, if you've got whatever time zone you're in, you know, whether you want red letter, orange letter, whatever. And then I'm really only interested in the US, right? And so I'll show the chart history this week. So these lines here, these red lines, these represent when the news event comes out. So now I don't really need to think. I mean, how many times have you been caught out where you've not realized there was a news event coming into play and you've been caught out, right? And it's because of news events just turn the market. So I have this little panel in the corner that tells me we have, you know, upper house elections, GDP, a few other bits and pieces. Upper house elections is essentially the unemployment, by the way. And then I don't need to worry about it. I know a red line indicates red letter, and I know an amber or orange line indicates medium in terms of risk. So always worth having that on the chart, guys, if you're not already. I asked this earlier, but since we've got a few more people on the chat now, what is going to be your New Year's resolution? What do you want to change in 2024, moving into 2025? Less trades, more patience. Completely agree with that, matey. Yeah, for sure. My ambition is to try to grow my YouTube channel a little bit. I'd like to get to 1,000 subscribers. I would really like that. That's me goal. That's my target for 2025. I'm at 540 something, I think. My problem is I don't do enough lives. Usually because work gets in the way. But I want to try to do more, put more effort and focus in doing lives. I have a different trading style, I think, than what I see mostly. I think what I see from Rips, he's more of a momentum trader. I think Patrick Wheeland is more of a smart money concept trader. I'm not sure what Alpine is. I think Alpine gets himself caught in a few different mindsets. And Nutty, I'm not sure what Nutty's trading style is. So yeah, I'm kind of hoping that Patrick drops into my stream and drops me a nice little $500 bonus. That would be nice. He seems to be doing that to everyone at the moment. So that would be awesome. Yeah. I think me, I'm probably, as I say, I switch between scalp. It depends on the characteristic of the market. If the market is trending, I scalp. If it's ranging, I will use my what's it called? I haven't even got a name for my strategy, but basically, you know, I mean, I've explained it enough times already, but I like to kind of get in at the extremes, right, when we're really out of balance, specifically at third standard deviation, as long as we've taken an objective liquidity, and then I'll hold that for longer. That's my main kind of bias. Guys, is that music too loud for you? Is that okay? Is it too loud? What about personal? So outside of trading, in terms of New Year's resolutions, do you have anything health-wise that you'd like to do? I'd like to start. I want to try intermittent fasting a little bit. I mean, I tend to not eat in the morning anyway. I tend to skip breakfast, and I try not to eat later than 8 p.m. But I want to try and tighten that window a little bit. I want to try and go 12 o'clock till 6 o'clock. I'm definitely going to do dry January. I want to cut out alcohol altogether for January. That's always a good start to the year. I want to quit vaping as well. I hate it. I want to quit that. So that's I've got a few things that I need to touch into gear. Try to be less erratic as well. That's with trading. You know, my thing. If I know personally I would be a great trader if I learned to cut trades. I have this horrible fear of just missing, of just like still thinking my thesis is right when it's wrong, right? And all of these different things like order flow and trying to read the markets kind of feed into that a little bit, which is not always a good thing, right? Because you know, markets change all the time, don't they? So I need to absolutely be confident in cutting a trade, and if it goes against me, it goes against me. It is what it is. I think that is something I really want to get better at. If I can cut trades, if I can cut losses, because my win rate is high. I have a really good win rate, but my losses can be sometimes too big, which completely wipe out, you know, your gains. So that's what I'm gonna really work hard at that, trying to cut losses early. You know, call them paper cuts. Take paper cuts. Markets seem to be moving down a little bit now. Here's back to our level. This is where we got out. So I'd like to see a bit more of a sell-off. I mean, ideally, I'm looking for back into balance, right? VWAP. That would be great. I mean, it's a long way off. But we have the news event in, I don't know, 20 minutes. Another question for you. How would you define, and this is to everyone, by the way, anyone can answer this question. How would you define your trading style? Are you more of an SMC trader? Are you level to level? Are you a breakout trader? What type of trade? If you could define yourself in a short sentence, how would you define your trading style? I'm just going to put rips on in the background. Hang on. All right. So, Miranda, it's contextual. AMT with failed breakout is your bread and butter. I have hard times in imbalanced markets. I actually favour yeah, well, no, I don't favour imbalanced markets because that's trending, right? That means markets are moving out of balance. Yeah, I struggle. I probably do my best work in consolidated markets or when markets are ranging, for sure. So so we were at yesterday. I was at I think just shy of 8,000. I think, and then obviously I lost $1,800 plus the $1,500. So it was about 3,000. About 3,000. Was it 3,000? Yeah, about 3,200 in total. I lost yesterday. So we're back up 2,000 odd today. Ideally, if we can bring this back to 8K today, and then finish the week off strong tomorrow, I'll be a lot happier.
to get a quick little scalp of CW before the news happens. 59.90 is still kind of trading around here. See if we can hold this. Jobless claims because it's Thursday, and then you also get the GDP, the Q3 third reading annualized GDP. Let's see if we can get S&Ps to start making some liquidity above this. Let's see if we can pop this up. There we go. It's a nice little pop seed there. Right there. We get some liquidity right there at 75 that I think that it's going to kind of pop the market a little bit. And again, here we pull back at 66 or so. And again, let's see if we can get this. Try to fill that with a 8 course. Should be able to get this pop right into that 8 course. Should exchange some liquidity right above that 80 level. Check here. You see my 9 contracts in the middle. There you go. So there we go. Quick little scout for $858. Now it's Offset X live. I wanted to get that scalp out before the news happens in 15 minutes. So there we go. Nice little pullback. The moving around. Thank you, market maker, for filling our order. I appreciate that. I think it's the music. The music is what's convincing these market makers. 858 keeps the 95 weight. I agree. It's kind of like a little bit of a micro squeeze around the 59.90 area too in the S&Ps. Yes, the down thrust and TL breach confirms the ending down on the fifth wave failure. So big rallies to 59.70. 10 long-term time frame traders are dominating. I like that. Nice analysis. Nice pullback up to 70. We are seeing some bids showing up. I think that there's a lot of people kind of preparing for this news. I think they're going to be displacing a lot of this liquidity still on this news. I'm just curious. Take that. 15 minutes. So yeah, the question was this morning, 12,000 was the biggest trade that we had in our community yesterday. I'm just curious if anybody could beat that 12,000 bucks. Rich good trades. That's exactly what it was. We all know that's true. Or everyone to buy to get out with your day profit. And if you're in a lot, there's no buyers to yourself. No transaction. But we're trading a very liquid market. You can always market in if you need to panic out of the position. Obviously, you're going to get a much worse fill than if you're using a limit order, of course, for the most part. There's very edge case scenarios where you will get a fill, and it would be better. But we're talking about extreme edge case scenarios there. We have some chatting more too, Chauncey. The independent is the word now for sure. And yeah, that in the last 18 FOMC meetings. I swear. I'm sorry, I didn't understand the straight. Could you explain it quickly? Yeah. The confluence of the order flow between the MQ and the S&Ps. We're looking at the S&Ps to trade into that 59.90 area, and there's some liquidity that they started to offer above it. And that's what we're looking for that target to swipe up to. So since they're moving in the same direction, there's convergence between the two indices, right? S&Ps are moving in tandem with the NASDAQ. So we're using like this whole number area, knowing that we're going to have stops being popped in that. here, if there's orders that were being stacked below to kind of support that.
I really want price to come back down to this zone for me to go long. I can't go long now.
Let's just use whole numbers. Like 59.90, we know that there's going to be stops placed above that level. We know that they're going to target those stops. We know that we're looking for a sweep of liquidity above that. If I start to see people in the NASDAQ, whether they're algorithms, market makers, or actual participants, if I start to see people that are stacking on the bid underneath, that means what? It means that if people are going to sell down sharply into that, they're going to absorb that order flow. They're going to absorb that liquidity on the bid, and they're going to be doing it with thicker bids. That's what we started to see them take there. And when they're pushing down, and that's why I added to 90 contracts, when they're pushing down into that liquidity, it's super strong to hold it there. So if you think about it, if you have 10 people in a room and each person has one contract to sell, there's nothing that those 10 people can do with each one contract to sell through an order of 200 bids. There's just nothing they can do. They can reduce the amount of bids from 200 to 190, but there's no amount of strength that 10 people with one contract apiece can do anything to sell through them. And so when you're seeing that on the fly, you have to make a snap decision. Obviously, I have risk management in place where my finger can slide right over to that $5 button. If the tape changes immediately, I'm out of that trade. But what we're looking for is that absorption. So we're looking for the confluence of 59.90 pop sweep of liquidity, and then we're looking for those bids to come stacking up in the NQ to support that ideology that, okay, we also see what you're seeing. Let's support the bid here in case somebody sells down into us so we can ride that pop as well. That's kind of the short-term explanation. Yesterday, I entered a short of 22,385, only took 18 points profit, 3060, which I was happy with. Need to learn to hold, bounce right off my 4-hour, 3-day downtrend. So what I would say for that is find a way to keep it running.
Back in a sec, guys. Just gonna make a quick coffee. Ready for the news?
Close your position at the end of the day. They're going to actually close it. So, I mean, that's a huge deal. You don't have to worry about it. You can just walk away from your terminal. I would have loved to be short where we had a trader in MC who was short from like 22,900. I'm not sure. Let me see. They posted an image yesterday. Let's see what they nailed it. Let me see if I can actually bring this up. This was the sickest trade that I saw. Why is it not? Here it is. Okay, I'm going to bring this up. I'm actually going to show this on screen. So, here. Let's see. Okay, so this was their trade. This is not my trade. This is somebody you want to see. This is like the best trade, I think, from anybody that I saw. So look at this. This is in their express funded account. They made $12,000. But look at this. They caught a long from 336, closed that long at 351. And then they shorted 21,900 and they covered at 21,320 on one single contract. This is what they made. So don't sit here and tell me that you can't make a lot of money trading smaller size. And by the way, one contract should never be considered small size. Like, yeah, one micro, but not one min. Look at this trade. Like, that might be the sickest trade that I've seen all month, or even all quarter. Look at that. Look at that. Like, and to close at 320? Like, how sick is that bottom tick, dude? And like this is a real thing. Express funded, 50K express funded, balance $16,000 in a 50K. Don't sit here and tell me you can't make money in a 50K account. Like, this is insane. Literally, like, I saw that trade and I was like instantly like, oh my god, one of the sickest trades I've seen. You know who you are, MC member. Sorry, glazing you so much, but one of the sickest trades. One of the sickest trades. So that was somebody in MC. I'm still shocked by that exit. The low of the market yesterday was 311. If I'm not mistaken. 311. 311. And they covered at 320. What? Imagine that with your 20 pound an hour. That's crazy to me. I mean, that's got to be the best trade. That's the best trade. Imagine now, let's just say that person decided to take that with one single contract. Instead of doing one contract, they were trading five contracts, and then they copied across five accounts. You got $302,000 a day. Oh my goodness! There you have it. That was the rock star trade of the day. Not mine. Not my trade. Not my trade. I want to be very clear. That is not my trade. That is somebody who traded it. I'm seeing there. We can see some massive wins on tops of today. I was looking forward to that. I think that if somebody can tag me like on Twitter when they post like yesterday's best, like when I was playing poker yesterday, I was like, dang, I could have made so much money on that drop. I wouldn't have locked out. Yeah, yeah, probably. Whatever. I tried to talk myself away. The idea that actually, what a day, what a day. It's not often that you see the NQ dropping a full 1,000 points, which is insane. Does FOMC always have big moves like that? One of the things when it comes to the market, one of the words that you kind of have to erase from your vocabulary is always. Because when it comes to the market, you're talking about an organic, living, breathing thing. Right? You have to remember the market moves based on the content of whatever the participants' ideology is in these trades. So even though algorithms are computer programs, they're directed by human ideologies for the most part. It's not that, I mean, there may be some AI that is self-writing AI that is improving upon itself in some way, obviously, but for the most part, these are directed by human beings, and those come from human thoughts that create what these algorithms are going to be doing. And there's market participants that are clicking buttons like you and me. It's an organic, breathing thing. So the word always doesn't really apply to the market. And that's one thing I learned early on in trading is that you bring always to the market, you're going to get movie blasted. Market is 100% psychology, more than algorithms, more than literature. Was it luck? How did they know to hold that long? Are you here, Nigel? You. Are you watching the stream right now? I don't know if they're awake right now. Probably. Maybe they had a bottle of champagne yesterday to celebrate that trade. I don't think they're awake right now. I would assume, I don't want to speak for this person, but I would assume that they trailed their stock. Or they just said, you know what, I'm gonna let this go until for some reason they had 320 mark on the chart. They're probably asleep. Market maker 651. I'm not seeing that, but we do have, looking over at TradingView, we do have a cluster right here, which is actually pretty spread, like 483 up to 660. Don't fool yourself when you're looking at the charts today, by the way. This just looks super compressed because this was such an outlier move. This is actually quite a range here, 480 up to 660. We're talking about almost 680. That's a 200-point range there. So this is a healthy zone to be having, but let's see what happens on these choppy close. In addition to the Dallas close coming out today, we also are going to have the Q3 third annual Q3 GDP is a big deal. So let's see.
Okay, gang. Right, let's see. So, 3 minutes away. Let's bring up the news.
Consumer was 2.8%, personal consumption at 3.6%. So let's see how this shakes out.
So, I'm kind of hoping price rejects a little bit. What have we got? We've got, let me just filter this out. I'm really only interested right now.
If you're ever curious about how you should be facing the markets, the answer usually is slow down, size down. Especially if you haven't gone through the paces of trading a certain session in the market before.
Good luck, everyone. If you're trading the news, be careful. Don't get caught up.
Let's relax.
Make sure you have good risk management in place. And I'm saying that like I had good risk management yesterday, by the way. My risk management yesterday was awful. Let's see. I'm looking for a nice pullback. I'm hoping we should remain bullish, but I want to pull back to get back in. So final GDP, previous 2.8, this forecast is 2.8. So gross domestic product, so growth of the US economy. And then we have unemployment claims. They're expecting unemployment claims to be lower. Claims means more people requesting allowances, right? So not jobs per se, just claims. So more money effectively from the economy, right? 20 seconds. Three, two, one. Pending, pending. Price bullish, bearish. Let's see. 3.1. Wow, so growth and less job claims. So we've got to try along, right? We'll go just below here. Oh, yeah. I don't want to lose too much. I'm going to keep my risk management real tight today. I was so stupid yesterday. We just don't know what'll happen, right? Looks like we'll get stopped out. Yeah. Okay. Let's try a. Do you want to try a short? Again, keeping things tight.
Given on top of X, they have the alert on the day, but not results, unlike Jackal Springs and things. Do they not? That's a good thing that will be added to the
Just trying to cover here, right? Just yeah.
do that. And cooling. Crazy there. You said one day when it's not accurate. Heck yeah, practice again. Let's go, baby.
Actually, I want to be just above the point of control there.
Trending side, you just have to get into your order type. Okay, let's go back to our. A lot of fake cat. So how did I do trending stop? If you go to your order window, there's a thing called order type. Let's see if I can bring this over. It's not going to show it, but it's under order type. You just change it to training style. That's it. If you set the trail for 24 handles and place the order, if you don't like the level 24, you click up to say 42 handles, it will trail you 42 handles. Very cool. Very good. So just put it at like 200 ticks all the time to get out of the way. Yeah. Then you can just leave your shot. Yeah, I just did it. You just did it on the practice game. Where's the practice game on 1,000 bucks? You have that.
Just can't push it down, can I?
We have to take proper control and not sit. Oh, I mean, we'll stay. Okay, good to know. That sell off was so crazy. We got all the way down to level we haven't traded out 6 months. Well, technically, we weren't trading this contract last week, right? So, even though it seems like we were trading this contract was, you know what I mean? They're trading CFD props. CFDs, I don't think are legal in the United States, but no, to answer your question, I know. And I think it's very dangerous to trade stuff like that. You need to be trading a market that is regulated, like the CME markets.
Need to see it pushed down here.
Is the real deal. It's not like
Just a move here. Keep it there. It was.
especially like Alex Crawford's. Whatever spread they want that doesn't have any relationship to the spread that you get at a real brokerage. And that's one of the things that's great about trading futures. People who come from the FX space, they tend to really enjoy trading futures because they don't have to worry about spreads that don't exist in reality. What's the next WSP? I'm thinking you're saying WPT. I'm going to be on a poker stream. The next poker stream is going to be January 25th. I didn't play poker yesterday. Played at the moon. We played 25, 50, 100. Had a really nice session. It was nice playing with those folks. I haven't played with them in probably like 2 months with that group that I used to play with. It was a really fun session. Had a really how long can you personally lock out accounts for? I don't want to trade until the New Year's do now. Well, you can't do it for that long. You can lock out for the entire day. You can't lock it out for multiple days. Hey, so if you ever trade in your express and have the order flow on your combine instead of only if I have my combine selected. That's the only way that can happen. It's going to be operator error. The thing that you want to make sure you're using your linking with top setbacks. So if you're not using your linking, you're going to have your accounts are going to be all over the place. Like you're going to have your order window might be trading on your combine, your chart window might be set to your XFA, the dome might be set to your settings. In your live listing, you can do it for you. Oh, that's a good point. Thank you for that, Dean. Yeah, if you are trading in your top set live account, you can hit up. They give you a phone number. One of the coolest things about top set when you go to a live account, they give you a phone number that's literally line to the risk management team. And even anytime you walk in the room, you're actually with them, and you can pretty much ask them to do anything. It's up to them whether or not they're going to do it. Like, I could call Nick right now and be like, "Hey, dude, I want to trade 200 contracts. Can I do that?" And you go, "Why are you wasting my time?" or something like that. But you can request anything you want from the risk management team. Don't play 83s, man. But it's nice since you made a flush. Oh, it was eight deuce. It was eight deuce. I raised. I think I raised under the gun with eight deuce suited. It was funny because after the hand, one of the pro players was like, he's like, "Wait, were you straddling that hand?" I said, "No, I opened." It's hilarious. You got to mix it up sometimes. I was like, $30,000. Live account applies for Mexico. I mean, if you're in a, yeah, I mean, of course, you got to be in a live account. They do it for all different countries. It's almost like you're at a real trading desk once you're live, huh? Yeah. Why do I always hit top or bottom ticks to the wrong side? It's part of being a trader. You're going to go through periods in your trades. I go through it all the time. I do it live on the stream. I catch a lot of black for it. I'll be reading the market completely just horribly. And I'll short the bottom of the market. We've happened all the time. Not a long time. Happens all the time.
What does that do?
We
So about $400 loss. Actually, a bit more like $600.
It's like sitting there, 2 weeks in cold street. Like, okay, I'm just gonna wait. I'm just gonna wait. I'm not gonna short this market. Keeps on going down. Keeps on going down. Sit there. Just be patient.
We just had no pullback. That's the thing.
Down keeps going down. Like, okay, fine. You know what? I'll short. Keeps going down. You're short. You press the button. The moment you click that button, so that's trading sometimes. Super frustrating. That's gonna happen sometimes. Coach Jay in the building. What's up, buddy? If it happens specifically on cold streaks, and I really don't understand it multiple times, right? Still part of trading. Get through it on the other side of things. And you start to read the market better, you get your confidence back. Get rid of the green gremlins. It's just how it works sometimes. That's what made the post FOMC dump so difficult to join. Always thought I would be shorting the low. Yeah, and then also like there's plenty of people who did short like a temporary low. Because like, look, let's go to the B roll. Like it's not like yesterday was like an easy day to trade, even though the market seemingly went straight down. But let's look at this. I mean, your risk tolerance maybe on the trade is like 10 points. Okay, let's say you're shorting like right here. We're just gonna pick an area. 829. This bounced to a high of 895. Dude. Okay, so look, like this is what I'm saying. Is like, and thank you, Dan, for pointing this out. You short it right here, and it seems like you're gonna be safe. Oh, you are not safe, Butterski. Bounce. Like imagine, like, dude, imagine the pain you feel. You short, you get clapped. You're back into another combine that you're trading, and then you're finally like, okay, it's going back down. And then you short it again here at 800, and then it claps you again. And then you're like, okay, fine, I'm gonna long it down here, right? Okay, tell you what, I'm gonna long it down here at this support, and it just goes. And fine, I'm gonna short it down here. You know, like don't fool yourself in thinking this is like an easy market to trade. You know what I mean? This is not an easy market to trade. There's plenty of cheeks that were given a round of applause yesterday. Hey, market, give my cheeks a round of applause. Don't be kidding yourself just because, like, on the 15-minute, it looks super clean. You know? The market was like giving a standing ovation to cheeks. If anybody asks you like how your trading went yesterday, you say the market gave my cheeks a standing ovation. yourself thinking that the market's easy to trade. It's never going to be easy to trade. Even on a move that looks so pure like this, there's people getting beat up. $1,300 like that case. There's only one way where anyone could have shorted that, which is before the interest rate decision. Press short and cover your eyes. And that's the thing. It's like we showed that trade earlier from Nigel, who had like the most rock star trade ever. What a trade! Boy, I wish I had that myself. I made $1,100 yesterday. I'm not mad about it, right? I'm not make $1,100. Wish I made 12K. Big headed astronaut said I had reset my account 3 times yesterday trying to get that last fight again. How did it work out? Did you win the battle in the end? And Cree says all I wanted for Xmas was 2 more XFAs. Xmas came early. XF. XFA-ness. Nice word. Let's see. Juan says I was in my Express account replacing the trade and disappeared. Order placed on my combines. I didn't even know. I thought the Express rejected it. End of the day, combine was up 23K again. I'm sorry. Yes, it was a battle. Definitely. It's easier to feel tilt when the market's hitting that high. That's the thing too. Like I locked up $1,100 yesterday, and I lost my account before the interest rate decision. I could have been one of those people who like press short and then it bounces 80 points in my face. Like I would have been frustrated by that. It's very easy to cheat yourself and think like, oh, market went straight down. No, it didn't. Market went straight down with a lot of crazy violent pops on the way down. Good luck holding through those. Easier to say go salt out. Are you in sync or not? If you're not, wait, stay out. I agree. Timothy asks, how do you prepare yourself to make big money? Pretty bizarre emotionally. Uh, it's one of those things. Windfall days happen. Right when I had my biggest trading day ever, it was an options trade. I didn't expect to make that much money, but I did. And it's awesome. It's a strange feeling, of course, but it's trading. Sometimes you're gonna have windfall days. Throughout my years of trading, is that windfall days tend to happen. Exactly. If you're counting on day, like if you go into FOMC yesterday and you're like, I'm gonna make $1 zillion, you're probably not, because you're putting so much pressure on yourself. You're kind of like calling it out that you're gonna crush it. Windfall days happen. Least expect. Tim says I should have locked out yesterday. Yeah. Yep. Market participants are obviously more inclined to buy the market, find a pop scalp. Thinking now needs to keep dropping. Very true. JC said, Rip, I have 5 XFAs and 4 past combines. How should I trade it aggressively or slow or 1 XFA at a time? It's all down to your risk tolerance because at the end of the day, nobody's going to know how to trade that outside you, right? You're going to be the person clicking the buttons. There's a lot of times where people go from trading in a combine to then trading in an XFA. And all the stuff that got them from the combine stage into the XFA just kind of goes out the window. And that's a huge problem. And it's very, very common too. It's not where it's like, you know, I don't know what I'm doing anymore. It's sort of like you're nervous, you're scared. This is real money now. And like, let's say in your combine, you're holding trades for like 7 to 10 points or something in the NASDAQ, or 7 to 10 points in the ES1 exchange. You come too quickly, and then you take it off. You're scared. You're nervous. A lot of things happen because of our psychological intervention in trades. You know, how do you get through it? Put yourself in those situations more often. It becomes more comfortable. How did we learn to ride a bike as a child? We got on the bike, we fell off the bike plenty of times. The bike's pulled over, we lose wheels or whatever. But the point is that you have to go through the motions. You don't learn to do something by not doing it and just thinking about it. Learn to snowboard by watching snowboarding videos and never snowboard. You have to put yourself out there and do it. You have to be expected to have some level of failure in your learning process. I'm still learning every day. I'm trying my best, believe it or not. I know watching the trade terribly, you're probably thinking, I'm not trying my best. No, I'm trying. It's just stuff that I'm trying. I'm really trying. I really am. Every single day, I'm trying to make money from the market. I do enjoy making money from the market. days it may not look like it. But that's the reality, right? That's the reality. We're trying our best. We're trying, and we're learning every day. With yourself, you know, you're with yourself and be like, "Oh, I made $1 billion today." Maybe you will that day. If you're trading well, top tips new rule almost dictate that you probably trade 5x a days because once they move any account to live, they'll all be closed. Is it true? Yes, it is. Holy Earth, if I could gift you a membership, I would. I wish I could. I wish there was a way that I could gift you a membership.
Hey, Gundy.
If you're scared to lose, you're risking too much. Yes, that is so true.
Yeah, that's just, it was typical news market shop, right? Got everyone in that zone, but I'm holding a trade. I'm purely thinking structurally, you know, kind of moving down a little bit. My stop is at the top here. If it breaks, it breaks. It is what it is. I'd like us to maybe come down to the value area high.
Did we lose connection for a minute there? Hot topic. Do you have to go to NA drink in the evenings at home? What's NA drink? Whenever we go out to dinner, I usually just ask for what the list of mocktails are. We're back. We're back. Sorry about that. Connection there. Whenever we go out to dinner, my wife they, in Vegas here, they always have a list of mocktails. Like this past weekend, if you folks know what a Negroni is, it's one place that we went to, steakhouse, and she had like a lavender mojito mocktail. What they call a Negroni, which is a Negroni that has rum. Chris, what are you getting to Mrs. for Christmas? Something very, very special. She's going to be quite pleased. Maybe I'll post it on IG. Yeah, it's called a no brownie because there's no alcohol. Negroni is the drink equivalent of chocolate. Who doesn't like a good Negroni? I love Negronis. Please stop me if you notice that I had a lot of adrenaline. What's that Mohammed? How you doing? How are you? Your name blue here. Your name is now blue, so I never miss you. Don't ever want to miss you. Mocktails are everywhere in London. Getting this place removed.
Should move quite easy because the liquidity, well, the previous order flow or orders were relatively low here.
64K from yesterday. Wow. That's crazy. Stream going on for 40 years. We're all like 40 years. Nice to see you here. Good to have you. Chris, you establish a bias for the day. I know you trade momentum, so there isn't a big need, but just curious. Sometimes I like to look at, when I'm writing the memo, the benefit of me writing the memo every single morning is that I'm able to look at the ranges of where other equities are. So, for instance, let's just say that we've had like a big down day like we had yesterday. And this morning, which by the way, if you ever want to catch the morning memo, the version that doesn't have like the NASDAQ levels and the S&P levels and the Dow levels, the gold, the crude, the Russell. If you ever want that version, it's released every single day for free on E-Trade, 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 Webull, Thinkorswim. It's on a bunch. It goes out to all the big brokerages. And if you just search like Rip's Morning Memo or Market Clubhouse Morning Memo, it'll pop up in Google as well. So
Okay, clawed a little bit back.
for SPY, Tesla, Meta, Microsoft, Google. What am I looking at? Apple. So you can use those levels to kind of see like where the mag 7
Looks like I got out, hopefully got out at the right time, like, because I think that's where my
because like today one of the
break even was, or at least my original order.
was we had both Nvidia and Tesla drew from 136 down to around 128 or so. If it is trading back above 130, that to me says that that's a stronger market. We might be in for that bounce that D was looking for as well.
Can Edge Pro X do volume profile over a drawn range? You can do range. So
A tremendous rip to the downside. I think that Microsoft gave up about 12 minutes or so, which is a lot. That's a lot.
let's see
Exchange. That's a lot of market cap
range.
released out to the market.
So add range. What range? Just give us an example of what you'd like to see.
Yeah, I do look at that. I do try to develop somewhat of a bias, but I don't let it control.
Maybe like a 20-point range.
Think about it, right? If I'm just looking to, let's just say we're in the trade, like I'm seeing this being a topping area of the market here. Obviously, you can take this trade, but let's just say I'm looking for this to be a topping area of the market, and I'm looking for anything below here to take profit. I'm only trading this part of the market. Now, when we zoom out, we can see how
Yep.
insignificant of a piece of the market that is. You see what I'm saying? Like I'm just looking for a tiny little bit. So does that really interfere with the directionality of the market on the day? We can see the market go like this, but if I
Try 5.
I still could have made my points in this.
Click to draw. Let me just double check.
Sense. Tricky day, tons of people eager to buy the dip. Meanwhile, there are also trailing stocks from yesterday above that will trigger overnight long and trailing stocks below. Very well. This is a rollover weekend back to the selling punch. It's weird, right? We're trading in the new contract right now, and we may have seen a lot of people opening down short positions. So
Like that?
the fact that we've had people rolling out from the December contract now to the March 25 contract, there's definitely an argument that we do see people may.
I don't think I know what you mean by draw. Is it on right? Is it on right click draw? Sorry, matey. I'm not 100% certain what you mean. Oh, you mean like
226,000 closed yesterday. In the December contracts, there's still 106,000 open contracts. Those are all going to be expiring tomorrow. So those would be
like this?
if nobody closes, I really doubt that's going to happen.
Obviously, this is on. Just so I understand what you're talking about. Like that, like a volume profile over a range. I don't know, or if I've not tested it out that much to know if that can be the whether you can do it on a range. I thought you meant range bars. Let me just go back to my OK tick chart. Let's see. Oh yeah. You can, yeah.
Awesome. Let's do this. Start a poll.
Does it show POC? Oh, I didn't check that. Let me just double check. I think it does.
Mix it up today. New ES. Now I'm actually curious about this.
Yeah, there's POC there, right?
Will the ES and the above or below 6
That's the POC there. You can probably configure this. Value area, show 70%. Ugh.
Let's see. Can you get a more realistic goal for like some of the trade that open with you? 1,000, I mean, it's just about half what people would. It's really not that many things. Honestly.
That's cool. Yeah, you can. Damn, looks like again I got out too early. Yeah, do you know? I Let me show you this real quick.
Ribs, following you for a while. I like your perspective on things. You're a very, very smart dude. I wouldn't go there. Obviously, kind of look at you as a mentor. Thank you. I appreciate that. That's nice. I think you have a pretty.
If you watch this video,
I think you have a pretty. I'm enough for the.
I talk all about getting moved over to live with Elite and the challenges I had. Because typically, um, I trade on a Mac, right? Via prop firms, the way I was trading is I would trade Trade because Trade works with a Mac, and then I would link it to Trading View. So I would do all my trading in Trading View. When I went live, I had because I didn't have a Windows-based machine, and the only option was Rhythmic. Now with Rhythmic, what I did find out is you can link it to this, which is Edge Pro X. Now, listen, even though this is Edge Pro X, the actual owner of this is Motivewave, so it's very, very similar to Motivewave. I don't know if you're familiar with Motivewave, but as a platform, it's pretty awesome, right? So, I flick between different things. On the where is it? Get rid of that. So I have 5 minutes on this chart. I have 100 ticks on this chart. I then have just an overview. I've got ES here and I've got NQ here. Obviously the heat map, which is awesome because the heat map, if you're gonna pay for Bookmap, you're gonna pay $115 or whatever, and then on top of that you've got your CME data. You've got TPO. So you've got your TPO data as well, which I use a lot anyway because I want to see where the single prints are. So in one platform, you're pretty much getting all of the stuff that you like or you might want to see. For I think it's $39 a month I pay. But this is now replaced. I wouldn't say it's replaced TradingView because I think TradingView has a lot of the stuff that I like on TradingView. I like to see the key levels, right? Objective liquidity levels, Asia high, daily open, Asia low, previous day low, because these are obviously big areas of liquidity. I got out that trade too fucking early there. Damn. So I don't think it'll ever replace Trading View, but as an order execution and everything else, order flow, DOM, it's ideal. Now, the good news is, I was hoping for the pullback anyway, because I do think possibly I want to go long. Now, I might actually scale in a long, starting with really low. And if I need to, I'll build into it as we go down, because I do like we're at a bit of a resistance level right from this peak, or support rather, and the plan is to try to build into a long. Yeah, tick data. Without tick data, for me, I used to always just use Japanese candles, time-based charts, and you miss so much of what's going on with tick data. Dustin, thanks for stopping by. Really appreciate your time, matey. Thank you for getting involved. But you're right with tick data. It really shows imbalances way better than what time-based charts do. So I'm with you. I'm with you on that. Off completely agree with that.
so they know they have any issues with it. That I'd be like, oh yeah, I was like trading on another problem. This is like elevators. Let's see here. A genuine question. Don't know if I can even ask it. Please ask it. Why wouldn't you ask any question? Did you ever trade with your own capital? That's all I did before June of 2023. The only thing I ever did was trade my own capital. I only started trading props in June. Does that the top of that? Does that actually do anything? Take care, Mohammed. We'll see you. Thanks for stopping by. I appreciate you, buddy. Does this actually do anything? Always wondered that. I always do it. Does it actually do anything? It makes a sound. That's what it does. It makes a sound.
Yeah. Yeah, I think I really started to understand the markets a lot better when you start to really look at, well, it's a combination, right? It's the DOM, it's time and sales, um, order flow in general. I'm moving away from time. I think a lot of the, dare I say, and I hope I don't upset a lot of people here, but SMC traders, at least newer ones or people who don't understand it that well, you know, they target like fair value gaps and stuff like that. But the problem is they're using time. I think a lot of the newer traders will use time-based candles and just identify an area based on a fair value gap and not really understanding what's created that fair value gap and is it a true fair value gap. What tick volume shows is the true imbalance because it's orders being printed across ticks rather than time. I've shown on many examples of this on lots of videos I've done in the past. If you want to check them out, but if you want to, there's nothing wrong with it. It's not bad, right? Because you still, you know, there are massively successful traders who only trade on time-based candles. But if you want to get more of a sense on what the market is doing, you really want to learn order flow, tick-based charts, footprint charts, TPO, right? Time, because the time piece is really key as well. How long does price advertise in a specific area? It's essentially what a single print is, right? If price isn't in an area for long, it's going to be a single print because there's not much liquidity there. It's what happened yesterday. Huge amount of single prints created. Markets do not like single prints. You can see them here, right? Look at all of these. Price volley down, massive, overwhelming disproportion of sell volume. Order book too thin, slippage at left, right, and center. Single prints getting created. So big imbalances right the way all the way up here. I think it's probably safe to at least cover our base. What are we on? $79, $80. I don't want to. Jivko Jechev has just subscribed to my channel. Thank you, my friend. Really appreciate that. I am trying to grow. That's my ambition for 2025 to try to grow my subscriber base a little bit. Try to do as many lives as I possibly can. It's not always easy for me to do lives because the time that I can do lives, but it's usually the New York session because I'm normally working in the morning for London. So I will certainly do a lot more lives specifically for New York. But thanks for the subscribe. Really appreciate that. I'm just annoyed I'm only in on one micro contract. Look where we caught that long from, though, guys. That was superb. And there was nothing clever about that. I just thought I'm going to scale into the order. So if price continues down to maybe, if you look at where it literally, a few dollars away from the value area high of the current trade. Now, price could, of course, still fall apart, but it has been bullish, right? And the good thing is now we've got expansion of the standard deviations, so more room to grow. See what happens is when we start coming into the third and second standard deviations on low volume, it will always kind of reject. When more volume comes into the markets, these start to expand, which allows more movement of the charts of the candles and the price. Go there. In fact, I'm going to scale in another contract. What I don't like about this is it doesn't consolidate your orders. Each order is considered a separate order. Like typically, if you're trading on, I don't know, another platform, it won't tell you what my average is. So I have to cancel the stop losses and then break even to figure out what my average entry is. I'll show you if this gets filled. I'll show you what I mean. Oh, we are getting close to the open, aren't we? Yeah. Okay, let's take this off. Miranda, brilliant advice, superb advice, really good advice. Stick to your current system, but see how market flow interacts with your same concept and ideas, and just start to watch and learn and see how things move. See where volume in the candle start to really determine what's going on. Like the way I like to look at it is like, you know, this is 1,000 tick. Each one of these is 1,000 ticks of exchange between buyers and sellers. Every time a contract gets filled, it will put it in. What I'm looking for traditionally is where is the volume being created on the candle? Because usually when like a load of bots kick in, right? So automation, stuff like that, you tend to see they'll drive price from a certain area. And you'll see a lot of, like, if we were to go long, like whereabouts is the volume coming into the move? Generally, not always, but generally speaking, like you can see here at the top, we have a lot of buying volume here. What does that tell you? You can see. Let me just expand this out a little minute. It's only a small candle, right? But you can see the volume on the buyers all at the base of this, at the top of the candle. Turns out to be a seller's candle, right? The reality of it is that shows that a lot of people are buying at the top of that candle, and we know that because look at the difference in the look where the buyers really came in at the top, expecting the price to break out. That did not happen. In fact, that's now been a lot of trap buyers. Point of control near the top, and then price sells off again, comes back up to that zone again, rejected. So order flow, you will not see that in a typical candle. If I show you that on here, like you can't see what's going on that candle. All you're seeing is during that 5 minute candle, we opened here, we closed here. Second 5 minute candle, we opened here, closed here, so on and so forth. Order flow. When you really start to think and look at it and think, where's the volume? Who's winning the battle in a candle? It, it becomes intuitive eventually. You start to just see these things. Like when I'm looking on order flow, that's typically what I'm looking for. There's also delta, right? The difference between buyers and sellers. I'm not showing delta here on these candles. I'm really looking for who's winning the battle in these 1,000 tick charts. Watch when we get to a specific level. Like, trying to see if there's anything interesting to show here. Price opened here, came all the way down, and then got rejected. And then you see a big buy count, a big amount of buy volume came in, and just at this specific price range, and then we took off. Like, again, you don't really see that in a typical candle. So just, I think what Miranda said is a really good thing. Don't try to just use it for trading to start with. Use it as a way to look at how you trade, and just start to tease out what confluences was you able to find in the way you've entered at a level, and what did order flow tell you? Was there anything significant that you can see? Really powerful stuff.
So you're saying that someone was telling you to someone was talking. Okay, so I got to know things like this.
Like, look at this here. So big sell candle. Look at that huge volume right at the bottom of that candle. Right? What does that signify? Right? It's not great, is it? It's someone is thinking that this is a reversal. Right? Where's the majority of volume on this candle coming in? Right at the base. What's that? That's food for the market, right? So that is essentially liquidity to drive the market up. And again, you don't see that in a 5 minute candle or a 1 minute candle or a 15 minute candle or anything. You don't know what's going on but what we can see, right? Because we can see order flow, is we can see loads amounts of volume has come in. This has been absorbed by buyers, and then price is then rejected. Now, I'm not saying that price is not going to come back down here. Of course, people are scalping. There's all kinds of different activities going on all the time. But it's significant that if you want to see sell volume, really, you want to see the sell volume based here. You want to see big red bars. You want to see the point of control being where most volume is traded, and then the sell off occurring, because that means it's backed by a lot more sellers up here rather than down there. Getting in near the bottom is essentially retail based, right? That's what retail do. They jump in thinking price is going to start moving down now, and then price will reverse because it's effectively food to fuel the move, whether that's up or down. Again, what we're seeing, loads of volume coming in at the bottom of a candle. Is what can we deduce? Right, that's a big amount of orders. Point of control near the bottom. My thesis here is that we may see price come back up again because we're starting to see trapped sellers trying to push the market down, but getting rejected. Right, and now these people are in a bit of pain. That could be that seller. So if you think about this, right? So we've seen a lot of big selling volume here. Tried to push the price down. Price didn't go down, and that could be that seller getting out of his trade, which of course is what? It's a buy, right? So that volume is then exacerbated another move up. It's just you can't see that in a typical candle, and just that alone should give you the incentive to think, okay, if I'm not using it now, I'll start to think and I'll start to look at that in tandem with your existing trading. But we are struggling to push through. I mean, it's a bit of a tug of war, right? Because we've got, buyers trying to push up at the top, and we've got sellers trying to push up at the bottom. So this is going to be a key range. If we break this range, I'd probably expect price to go down. If we break above this range, right, because a lot of the point of controls are near the top of the candles, is where most volume's being traded, then price can obviously start to go higher again. Yeah, it's completely agree. Really, really good advice. That really good advice. Order flow's not for everyone. Sometimes it can be overwhelming. As you've just said, and you're trying to keep things as simple as possible. But over time, when you start to kind of add little bits at a time, maybe it's just you want to add volume into your candlesticks to see where they're at. Maybe it might be delta. Um, you know, over time you just start to see it. But tick charts, I mean, the simplest way. If I was starting off, my advice would be to start with tick charts, right? So these are tick charts. So this is a tick chart of this is time. These are 5 minute bars. This is ticks. So every 100, this is 100 tick charts. Every 100 ticks, we see a new bar being created, right? So it's not time based. But what this shows is like that is a true imbalance, right? It's only small, but what you see a lot of is price getting filled in, balance, imbalance, balance, imbalance, balance, constantly seeing this kind of, you can see here, imbalance gets filled in by this. Then we see more imbalances being drawn down. Of course, we get imbalances filled. Um, we have an imbalance here that I probably think might come down and fill again. But on tick charts, it's really powerful. Let's try and see what that looks like on the minute time frame, just to see if we can draw any comparison here. Right, so that, see that is an imbalance on the 1 minute. You see that there, right? 1 minute you see a small imbalance, but it's not. The imbalance is being filled on the ticks. So we can see here, matter of fact, that if you think that this is an imbalance on the 1 minute, it's not. This is that's that same area. It's not, it's completely filled. Look, we can see where that cross is. That's a fair value gap on a really small time frame, right? But it's not. It's not. It's being filled. So what order flow shows is the true representation of where where the order book is actually exchanging. So it's really powerful. And again, I'd start off with tick charts because the less scarier, right? And then once you kind of start to see how tick charts are operating in relevance to time, then start to think about order flow a little bit and start to really refine how you want to do. Now we're at $103 here, right? So that probably doesn't bring us far away from parity from where we are. Um, but it's one of them. Do we take profit and wait for the open, like being sensible? I think that is actually sensible. I'm going to wait until we just move a little bit higher, push on a little bit more. If we get that opportunity again, or maybe not. Just a little bit worried about what will happen during the open. Having said that, we're in on one contract. If I get rid of that and then I break even, you know, that's that's a no lose it's a no lose trade, right? If we get above $100, I'll take it just because why not? Little push higher. Okay. So that was not a bad trade. That it was shame it was only one micro. Still $100 though. Now we're back above 2K, which is good for the day. And traditionally, when I have a good morning, I have a shit afternoon. So I am gonna not trade the open direct, but let's watch order flow, right? Let's as a little exercise, let's watch order flow. Let's see if we can see what happens, and just see if we can kind of take anything from it. Hi Rob, this is called Edge Pro X, but it's basically a flavor of another platform called Motive Wave. So you may have heard of Motive Wave. It's very similar to that. Really solid platform. I use it for order flow, tick charts, heat map. $39 a month. I'm not an affiliate or nothing like that. So, but there is a 14-day trial if you want to try it out. I'll just drop the link. So you can get it's full featured 14-day trial. Um, if you want, and I've been meaning to do this, I will do a bit of a tutorial on how to set everything up with Rhythmic and how to link it all across. So let me know, guys, if you want me to do that, and I'll do a video on it. But I really like I do really like this platform. You can indeed. You can indeed. I think with Apex though, you would only see, because this is my live account. I've got CME data, so I think you'd only get top of book, so you wouldn't see all of the orders here like you do with Apex, like you do on a live account. But if you pay for the CME data anyway, then you will. Yeah, no problem. I'll do a video. Okay, guys, we are 4 minutes away. We've just had that liquidity injection for that move. Kind of feeling like I should have held, but anyway. But you see, look, volume building at the base. That's a good sign. You want to see the volume building at the base, really, for a sustained move. I don't like to see volume building at the top of the candle because, that's always an opportunity for an opposition, specifically if it's larger orders at the top of the candle, to start moving down. Get Nutty on in the background. I like Nutty. He's a good guy.
You know what? Actually, one second. Uh,
Oh, so I do think we're going to at least eat into this single print here. Obviously, we've got another really large single print here. We've also got I think that was the value area low for yesterday. And we have value area high right up here. So we could potentially, I'm not saying it's going to happen, but as a long target, I'd be looking at that value area low from yesterday. That would fill in at least a good proportion of that single print. I would, moving over to trading view, we have pivot point here, right around the 732 zone.
right here, this day was similar as far as how much it was, how big of a sell off it was, but
We're
yesterday
kind of in this, but you've got to be mindful that what does this look like? This just looks like a big bear flag to me
the COVID, I'm not even sure COVID.
for another move down. So it wouldn't surprise me if price comes up, gets everyone super bullish, and then does another leg down. So yeah, I may just give commentary and see how we go.
Good morning, Mo, Trader J, D Cover, Angel, good morning, Trader.
I'm quite happy that I've got back to parity, so I'm
6% though. I know.
I'm okay.
But still. How we doing, Larry, trade bum? That wasn't the big sell-off in history. It wasn't. Like in a single, like 2 hour span. I'm saying like in points.
We calculated earlier that 4-hour candle for the FOMC was 938 points. That roughly worked out on a one contract to just over 19k in profit for one contract. Okay, here we go. Market is opened and she is battling down. Okay, let's see. Let's watch order flow. Let's see what we can see here.
Immediately just started to sell off here, so they should.
Remember, because these are 1,000 ticks, these will start to move a lot quicker now because the ticks get filled a lot faster, a lot more liquidity, a lot more volume.
Hang on, I gotta switch my screen. Okay, my coffee's up.
Look at that. Could be a big take profit. Could have been 100. That was 100 contract order. Could have been a profit taken.
Ready to rumble. Yes, pre-flight checklist. Trade copy are good. Yes, I hope we did. Clock we got the right ATM.
Point of control at the bottom.
Trade copy on. Or trading micros. All systems are to go. Now we're above the C-Satan. Interesting.
His price is the single print.
I think I would look at that as a win. I think so. Yeah, get ready for a lot of clenching today. I'm going to be pretty careful. I'm kind of hesitant to even take this opening trade, to be quite honest.
ES is flying.
Be
NQ is just lagging behind, but ES is really going.
so we'll see, but I might not even take it. Let's see. This is going to be more of a
This is 106. Look how fast 106 moves. And watch for imbalances.
looks like he wants to go.
Right, all balance price action. Little imbalance here.
Yeah,
Little imbalance there. Gets filled. Filled. Another imbalance here. All of these imbalances, I imagine that these will get filled. If price is going to be bearish, what you'll see that these will probably get filled. Oh, maybe not. Wow, okay. We are battling down now, guys. Let's see what's going on order flow.
Right now, it looks like this is a short, but
Tricky market to trade, guys. I hope everyone's okay here.
I'm not going to take it. And we're going to second guess this decision.
Tricky.
We're just not going to take it with its volatility. So
I'm on the sidelines at the moment, just kind of waiting because it's difficult to trade. There's no real telltale signs on which way the market's going to go. Just idea. But, you know, going back to that tick chart, right? So all of these here, right? These are all imbalances, right? So filled. Will it fill this one here? Let me expand this out. Still got little imbalance here. Now they've been filled. So again, tick charts are just great for seeing how price moves relative to balance and imbalance. And it's only on a very small, very small areas and zones. But when price moves this fast and you get imbalances, it's a true imbalance, right? Because this is a tick chart. This isn't time. This is ticks. every time a tick is exchanged, it'll fill the candle. So we have some imbalances here, nearly filled. Imbalance here. Down to this line will be filled. It's good enough. There you go, filled. Imbalance up here. It's expected to get filled. Up to this red line. Really insightful stuff. Imbalance there just got filled. More imbalance here. Imbalance filled. This is the lifeblood of the market, right? When you watch it at this interval, you see these things all the time. That's always what my eyes are glued to. Where are the imbalances? Because typically, there's always going to be imbalances when price is moving, right? But when price always comes back to retest them zones, refill that imbalance, even at a tick level, right? So if you think about that kind of granularity, even at a 100 tick level, it's getting filled all the time. Now, it doesn't tell us not to know. It's not like, okay, how are you trading imbalances? I'm not. I just like to, it's something I just watch over and over again, because now I'm seeing we've got a lot of imbalances here. And of course, we've still got imbalances up here as well. So I kind of think, look, there's all of these imbalances here. Right, so let's just see where they are. So imbalances from the original push up earlier on. Where are we in the wider scheme? Still moving down aggressively now. A VWAP here. I might consider a small long from VWAP. Yeah, I would actually. This was my original long from the Globex. Let's test a small long just below VWAP. Just waiting. Let's cover our trade. No. It's got there. 248 orders, guys. Yeah, see that? Wow. That's what you want to see. Huge order there. But let's hope that gets defended. Right, I'm going to go in with a second buy bid, because I think that'll get defended. Now in 2 contracts. Remember, this we want to see this get defended, this line here. Really, really huge bid that came in. 248 contract bid. I mean, that was insane, right? Again, where would you see that? You would not see that on a candlestick, right? I'm just going to break even on my trade, so I know where I am. Just cover a little tiny bit to cover commissions.
If you dump day, 500 point dump day, but
I'm just following the money here, by the way, right? I'm following that. This guy knows what he's doing. If not, then so be it. But if he's willing to defend that level, then I'm gonna be happy to also honor that.
distance also we need to look at the options well and not hedging that third. Yep, I remember you talking about that. That takes me back to the days when I used to be trading options. Trading options was like understanding the delta, the gamma, and I love it. I find it interesting. It was fun, or I enjoyed it, but I definitely didn't make any money. If I traded FOMC, I did not envy. I did not. I was solving. I actually ended up golfing yesterday. Actually, one of my best rounds of golf, I shot 4 over on 18 holes. So that was awesome. Broke 80. That was really that was awesome. That was really, what made it even better was I played with two random guys. They paired me up with
Take that, guys.
and yeah, usually
Under
this
100,
kind of
just shy of $100. But I think this area will probably get defended. That's a huge order there.
when I get paired up with someone that takes golf seriously.
And get back in. Goes.
To play by the rules. I mean, I don't care what they do, but I'm going to play by the rules because if I don't play by the rules, then my scoring doesn't count. So they were both like same, like they kept track of the score, and they were very, very cool people to play with. And all the rules and everything. And it was a lot of fun.
Defended again, guys, yeah? See that? Defended again. I'm going to cancel that, and then I'm going to break even. Ah, hit my take profit. Another $100. I'm just taking base hits today. I'm not really, but for anyone for anyone understanding what happened there, right? So on the order flow chart here, we've seen a single order of 248 orders came into the market. Huge amount of volatility. Look when price come back down to try to retest it. Rejected. Why? Absorbed. And now look at price. Absolutely motoring. It's the power of order flow. You don't see that in a candle.
You were trying to take our money, weren't you? You flying down. They accused me of slow playing them. I told my like this is not usually how I play. Usually
These are the things you'd always want to try to spot when you come out. And this platform's fantastic for that. It's called Big Trades. This Big Trades here. So anything above 100, it will notify you as a big trade. That was a big trade, right? 248 contracts. Who do we believe? Who do you think has the capital for 248 contracts? It ain't any retailer, right? There is no retailer that's going 248 contracts. I mean, let's just do the math. 248 contracts, right? Calc. Right, it's $20 a point. So we have 248 contracts, right? Times $20 equals, right? That for every point. So let's multiply that by a 20-point move. Nearly 100 grand for 20 points, right? We don't have that kind of capital. So this tells us that's got to be institutional. That's got to be hedge fund. That's got to be pension. That's got to be banking. It's got to be something big. So we're just jumping on the coattails of that. And then it's getting defended. Let's see what happens if price wants to come back down to this zone. That was the perfect. I'm so glad we got that on the live stream there because that's That's power. We took $100 out there, not massive, but I was only trading one contract, right? Let's see what happens here. I'm not going to get in for the third time because I'm just seeing what happens. But I imagine it'll get defended again. I wouldn't see any reason why not. Just getting absorbed. This level just getting absorbed right at VWAP. I mean, these might be holding for a longer time frame as well. Specifically if it's institutional, right? They may not be thinking too much about scalping and intraday trading. We haven't seen the opposite side of that trade come out the market, right? That's 248. There was 151 being bought there. That's not take profit. Otherwise, that would have been a sell. Guys, I'm probably going to finish up soon. I don't think I'm going to do any more trading today, if I'm honest. Really good session. $2,000, well, $2,200 up. Clawed back some of them losses from yesterday's disaster. Trade safe. Thank you, everyone who's followed along. Always appreciate a subscribe. I'm going to keep doing lives. But again, look, guys, defended again, right? That level. Really good stuff. Trade safe. I will speak to you guys tomorrow if you're online.